all throughout the week. The president really going to be doubling down on what the State Department has said this week, which is they're really calling into question just how they can justify Hong Kong having its independence, especially given how Beijing has passed national security laws and how they have been able to really upend the financial independence of Hong Kong. So I think you're going to hear the president talk on that. It comes as there is bipartisan support amongst Republicans and Democrats. Really, this is one of the rare geopolitical areas where both parties agree. So the president definitely going to be hammering home that point. And it's just this series of policies that have come out of Washington, D.C. from both sides of the aisle, really resetting the U.S.-China relations.
Kevin, as you know better than me, if that news conference takes place with press in the room, that conversation will very quickly get away from China. And to help answer Tom's question, Jack Dorsey could be the audience of the president today in that news conference. I just wonder, Kevin, do you really think that if there's a news conference today on the next steps over China, that conversation won't quickly switch to Minneapolis?
No, the focus on this press conference is now just going to fully be on Minneapolis. And in fact, just moments ago before coming on air, the president tweeting out at Twitter precisely and raising concerns about how Twitter has not been able to police itself regarding information with China, for example. So the president has yesterday with the executive orders raising concerns about big tech companies, Instagram, Twitter, and the like. And in this latest tweet, the president once again calling on Section 230 with regards to the Fair Decency Act and raising that issue. This comes as the Twitter last night labeling one of the president's tweets with regards to the protests in Minneapolis as quote-unquote glorifying violence, end quote. That's from Twitter, a label that they did on that specific tweet of the president, in which he said once the shooting starts, once the looting starts, the shooting starts. His words, the president's words. So a very, very volatile, quickly moving situation involving race relations in the U.S. and now this issue of tech companies now very much wrapped into that story in Minneapolis.
Kevin, isn't this exactly what the president wanted, was to shift the conversation away from how the U.S. would respond to China, about the U.S.'s response to the pandemic, to some of the red meat issues for his supporters, such as race relations, such as what we're seeing with social media? I mean, wasn't that basically the intention here?
You know what, Lisa? No, I don't think that that based upon the conversations that I have with the re-election campaign and sources and Republicans, even members of Congress, I don't think that the race relations in the United States is an issue that anyone wants to see happening at all. The Biden campaign has heavily come out and criticized the president's handling of this. And beyond that, to be candid, I actually think that the president would rather be talking about China and Xi Jinping than the situation in Minneapolis. But what was supposed to be a press conference in which they wanted to say that they were going to be more aggressive on China is now going to be completely about Minneapolis, most likely.
Kevin, I want to have a 1 hour conversation, and John Farrell just said I can't do that. I don't know, what's his problem on a Friday. So let me cut to the chase. Is the White House overwhelmed right now by this news flow about Minneapolis, Twitter, China? Are they overwhelmed by the pandemic? Is there almost a policy exhaustion at the White House?
I'm not sure if I would label it as a policy exhaustion. I think that this press conference this afternoon will be one of the more notable ones. I'm reminded of the press conference that the president gave in New York City in Trump Tower, actually, after Charlottesville. And I think that the comparison might be similar. I think that there are really three issues right now. One, U.S.-China relations. Two, race relations in the United States. And thirdly, this issue of regulations for Silicon Valley. In no particular, I don't want to rank any of the issues. That's not my intent. But those three storylines are very much going to be on what's driving the conversation into this weekend and into next week.
Where's the former Vice President Joe Biden on all of these issues, Kevin?
Well, the former vice president has criticized the president, especially for how he has handled the Minneapolis situation. The Vice President Biden is set to give more public remarks throughout today and into this evening. He will be appearing on a host of different national news programs. And really, they view this as something that is going to be crucial to the former vice president getting elected, and that is the African American vote. And so for Biden's campaign, this is an opportunity for them to draw a contrast for how his administration would handle race relations and how the Obama administration handled race relations versus what we are seeing now. That said, the president typically takes the strategy of barraging through any type of criticism, particularly in a moment where he is backed into a corner, politically speaking. Yep. So I would suggest that this afternoon is going to be one of those moments where he will come out forcefully and aggressively on all three of those issues.
Kevin Cirilli down in Washington. Tom, I don't think anyone wants to see
Kevin,
a repeat of that news conference that took place here in New York City several years ago after Charlottesville.
Yeah, there's no question about that. I mean, the images overnight were really shocking, John. I know we'll have them in our news across radio and television. John, just very quickly to say, the simulcast, it is fun. I'm glad we're doing this.
Very cool on TV and on radio. The conversation continues. We'll pick up the story in foreign exchange with Ibrahim Rakbari of Citi Next.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
For the Jewish Communal Fund, Noel Spiegel, former senior partner with Deloitte & Touche and past JCF president, discusses the advantages of a donor-advised fund over a private foundation.
There's a lot involved in having a private foundation. You need to engage attorneys, you need to engage accountants, file tax returns. At JCF, all of that is done for you. You don't have to get involved in anything other than making your contribution to your fund and then determining which grants that you want to make.
A JCF fund may be opened with a minimum $5,000 contribution of cash or appreciated securities and can be used as an alternative to or together with a private foundation.
If you have a foundation, you have to list all of the contributions that you made. Potentially anybody, because the information is public, can find out exactly which organizations a foundation has made charitable contributions to.
Let JCF simplify your philanthropy and protect your privacy. Learn more about JCF's private client group at jcfny.org.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
The IBM Flash storage solution can be broken down into 3 S's. Speed, retrieve data fast. Scalability, grow your storage as your business grows. Simplicity, Easily migrate and integrate with existing systems. Oh, and there's a fourth. It's surprisingly affordable, with a recommended monthly price of £200 for 26 terabytes. Order by the 30th of June and pay nothing for 90 days. Visit ibm.biz/flash offer now.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz, 2 hours away from the opening bell this Friday as we close out the week and the month of May as well. Equity futures down 6 points on the S&P 500, down 0.2%. Positive on the week, positive on the month by around about 4% on the S&P. In the bond market, treasuries set up as follows this Friday morning. Yields come in 2 basis points to 0.67% on 10s. And just to make it really quick in foreign exchange, the dollar weaker, the euro advances. And this, for me, Tom, the story of the moment. Risk appetite continues to build, and that dollar strength continues to fade.
No question about it. Catherine Mann, of course, running economics at Citigroup, and what a job Willem Bouter did providing leadership there. One of his great acquisitions is Ibrahim Rabari, who was just brilliant on Europe with a certain authority and then on foreign exchange as well, and we're thrilled that Dr. Rabari could join us this morning. Ibrahim, John mentions the euro call 110. John has seen this 47 times in his lengthy career. Are we going to get suckered again into strong euro and then oops?
Yes, Tom, John, thanks for having me on. That's exactly how we feel. So we think for the moment there is a bit of upside drift in the euro, and that's partly because there's a surge in markets for undervalued assets, and Eurozone equities, BTPs, and to some degree the euro show up there. But we think this is going to be on borrowed time. So even though we think there will be a little bit more upside drift in the euro and in euro dollar, for instance, we think that there won't be much more headroom. And just as before, this rally will be over before long.
There's a question about the other side of that trade, which is the dollar, and we're watching the dollar continue to weaken. I was kind of shocked this morning when I came in to my living room that the dollar was weakening versus even the Chinese yuan, the renminbi, despite the elevated tensions between the U.S. and China. Are we finally reaching a point where people have had it with the increase in the debt loads and some of what's going on in the United States and are moving away from the dollar, or is this just a temporary reallocation?
So from our perspective, it is probably more temporary, and there are good and bad reasons for it. I think the good reasons for why the dollar is a little bit under pressure right now is that the global investor base is getting less worried about the rest of the world. So we are seeing activity indicators in general slightly exceeding what people were expecting. But even on the health side, I think the long-suffering emerging markets are seeing signs of flattening as well. So there are good reasons for the rest of the world, if you like, to see a little bit of dollar downside. And that also translates, again, into looking for what looks cheap, and U.S. assets don't look cheap by any metric across the board. And then there are the bad reasons, quote-unquote. So there is some level of concern around U.S.-China tensions, the debate about U.S. debasement, and then also slowly a beginning concern about the potential risks attached to the U.S. election. So these are, I think, very acute for the time being. But once again, we think that's probably temporary. We think that the U.S. still looks as, among the least ugly in the global economy. The likelihood of a bounce back in growth in the U.S. is much higher than elsewhere. So we think it's once again too early to write off the dollar and call an end to the strong dollar.
Ibrahim, right now it just feels like a sentiment story. It feels like a positioning story, and that's what's pushing some of these big moves over the last several weeks. It doesn't feel like it's got anything to do with rate differentials, just optimism around places like Europe. Why don't you buy into the euro optimism of the last couple of weeks, Ibrahim?
Yeah, so we think there are two reasons why we're skeptical. One is exactly on that issue of risk appetite. I think a good chunk of that was that previously we had very defensive positioning, and I think we are now at a point where positioning is by no means stretched, but it's no longer very defensive. So we are already at relatively neutral levels, and we do think there are significant risks for, let's call it, the second phase of the recovery down the road. So significant risks of disappointment. that could weigh on broader risk appetite. And again, I think assets like Eurozone equities would be very vulnerable. The second has to do much more with the specific European developments. We, of course, had these initiatives around the EU Recovery Fund, the French-German proposals, and so forth. And even though we think that these are significant, visible fiscal transfers supported by Germany, we don't think they're a Hamiltonian moment. We don't think this is a game changer for the Eurozone or for the Euro, in that it doesn't really chart a clear path going forward. It's dealing with a one-off situation in a fairly constrained way. So these two reasons make us skeptical that we're looking at a kind of enduring break in the Euro or enduring upside for Eurozone assets.
Ibrahim Ragbari of Citigroup with us today. Ibrahim, I'll just follow up on the ECB next week, just briefly. Might sound stupid on the surface of things, but I'm trying to work out whether more QE next week is Euro positive or Euro negative. Which one is it?
It's a very good point. We think on balance right now, more QE is Euro positive. And that's because you still have a risk premium, particularly for BTPs, and Euro asset purchases by the ECB bring down that risk premium. So in that sense, we think if the ECB did not increase asset purchases, in fact, the Euro would end up selling off, and so would, of course, in particular, periphery sovereign debt.
Ibrahim, you mentioned a Hamiltonian moment. Many people are thinking the Broadway play. I'm thinking about way back where maybe it was fractious, but Hamilton had to deal with, I'm going to say, 13 colonies or states, however you want to describe it. You can't have a Hamiltonian moment with 27 distaff countries, can you?
I'm very sympathetic to your perspective. I wouldn't completely write it off for the very distant future, but I think certainly this isn't it, and we're far away from it. And in this specific case, as I mentioned, it's one-off. There's no transfer of fiscal powers or political powers even, and we're dealing with a construct that's not even easily scaled. So I think it is very inappropriate to refer to this as a Hamiltonian moment.
So just going forward, to broaden out, your base case is that the dollar will resume its strengthening and you'll see a weakening in the euro going forward, and that the dollar will end the year as the dominant currency, just as it was a couple months ago. Is that correct?
Yeah, I think broadly, but we have a couple of things along the way, and I think the one that obviously stands out is the U.S. election. So what we assume is that we are in a sort of late stage of the rich recovery, but then there will be a period of uncertainty around the U.S. election, and we think that the dollar might end up being a little bit under pressure because of that. But then around the election, the dollar would once again resume its uptrend as well. So there are a few more ebbs and flows, but we believe that the dollar bull market can still continue.
John Farrow, I want you to get a question in here on this ECB forward meeting, because I think, John, you looked awfully good on the lawn of the ECB building just a few years ago. I mean, you were like the Frankfurt expert as well. John, what do you see from the ECB? And I know you've got a question for Dr. Ragbari about it.
Tom, I used to time my visits to the ECB really effectively because they go on tour twice a year. So I'd end up in places like Cyprus covering the European Central Bank. You've got to time these things properly. We'll do that. Hopefully next year, if things get back to normal, we'll go on one of those ECB tours as well. Ibrahim, this is the problem for the ECB. Brilliant. They're already doing so much. What's the objective of the next move? You'll remember just a couple of months ago, Christine Lagarde said she was not here to close spreads. She wanted to put pressure on the fiscal policymaker. What kind of pressure do you put on fiscal if you follow up next Thursday with more QE and more asset purchases?
Well, I think it's absolutely critical that they continue and reinforce at this next meeting, because not only are spreads still wide in periphery sovereign debt, but in between we've had that German court ruling which had questions the ECB's capability to do its job. So I think at this meeting it's truly essential that the ECB, at least in some shape or form, reinforces its presence in asset markets. But beyond that, also just keep in mind that unlike the Fed, the ECB has not been particularly proactive, forceful, or aggressive, as Chair Powell likes to refer to it. We've seen a pretty steady run rate from the ECB. So I think it's, again, important for the ECB symbolically to be active, even if kind of on a weekly basis we don't see particularly pressure rising on risk assets in Europe. But I think that the ECB does act in some shape or form next week will be extremely important.
Ibrahim Ragbari of Citigroup on the situation in Europe and the foreign exchange market. Ibrahim, great to catch up with you, sir. Thank you. Send our best to the team. Euro dollar 111.41. I think this is day 4, Lisa Abramovich, day 4 of this simulcast, this show from TV and on radio. And Tom's already trying to send me back to Europe to stand in front of the ECB in Frankfurt, Germany. I don't think that should be lost on anyone,
literally.
should it, Lisa? That it's day 4, and he's trying to get me out of New York.
Yeah, remember when those good old days when John Farrow would just stay on the lawn. All right, Tom, go ahead.
No, I just, I had to take off one of the 4 days. It was so strenuous.
Was it? Was that difficult after day 1 that you had to go home and start drinking and take day 2 off? Tom, we might have to start drinking in Europe. The optimism around this story is just unbelievable. We still haven't seen everyone line up behind one idea. I understand the reason for optimism when you hear the likes of Germany get behind a project like this, when you hear even the likes of Wolfgang Schäuble, the former German finance minister, also lining up behind an idea. But still, there are holdouts. Austria, the Netherlands, others as well. We're just not there yet.
Yeah, I totally agree we're not there. And, of course, their backdrop release is going to be the same labor challenges that we have in the United States. Lisa, I'm sorry. I'm completely focused on a week from today and the unemployment rate. And I would suggest to both of you, but Lisa, pick it up here. I would suggest without question the labor economy of Europe will be front and center as they face these challenges.
Yeah, and I think that it's really important as we talk about the U.S. unemployment rate to note that the unemployment rate over in Europe is also surging to record highs in places like France. And it really raises a question of how much unity there can be in order to support these economies and how bullish you can be, John, to the point that you were making before on the region, especially given the fact that we've heard this rhetoric of joining forces before.
We've seen this movie quite a few times, let's be clear about that. Next week, next Friday, the payrolls report, full coverage right here on Bloomberg Surveillance, live on Bloomberg TV and, of course, on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramovich. Next up on this programme, we take the attention to the tech sector, and one company in the spotlight, Twitter. Up next on this programme, Dan Ives of Wedbush. From New York, this is Bloomberg.
Now, with the latest news from New York City and around the world, here's Michael Barr.
Lisa, thank you very much. Protesters angered by the death of a black man who died as a white police officer kneeled on his neck have torched a Minneapolis police station that the department was forced to abandon. This woman was one of the many peaceful protesters.
I think it's important to know that we're tired, right? We're fed up. It's been way too many times where we've had to peacefully protest.
However, Mayor Jacob Fry says violent protesters have gone too far.
There is a lot of pain and anger right now in our city. I understand that. Our entire city recognizes that. What we have seen over the past several hours and the past couple of nights in terms of looting is unacceptable.
Meanwhile, President Donald Trump is calling protesters in Minneapolis thugs and vowing that when the looting starts, the shooting starts. Twitter warned that Trump's tweets were glorifying violence. The tensions between the Trump administration and China are growing. The administration may soon expel thousands of Chinese graduate students and impose other sanctions against Chinese officials. These are the latest signs of escalating tensions over trade, the coronavirus pandemic, human rights, and the status of Hong Kong. President Trump says he intends to make an announcement about China today. Brazil continues to be the Latin American country hardest hit by the coronavirus pandemic. The virus has killed more nurses in Brazil than in any other country, according to the International Council of Nurses. Live from the Bloomberg Interactive Brokers studios, this is Global News, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. With the Bloomberg Business of Sports report, I'm Michael Barr. Wrestling entertainment giant Vince McMahon has withdrawn his bid to purchase the assets of bankrupt Alpha Entertainment, the owner of the fledgling XFL Springtime Professional Football League. McMahon's withdrawal in a filing with the U.S. Bankruptcy Court for the District of Delaware came in response to an opposition lodged last week by creditors. The Unsecured Creditors Committee accused the XFL of being little more than a shill for McMahon, who was trying to save himself from any creditor claims. The proposed sale would be free and clear of liens and claims, which is typical in bankruptcy sales. But McMahon says he has acted only in the best interests of the league and its creditors. Mixed martial arts and boxing are back in business in Nevada. The state's athletic commission unanimously agreed to allow 2 UFC events and 2 top-ranked boxing shows in Las Vegas over the next 2 weeks. And that is a Bloomberg Business of Sports report. I'm Michael Barr.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Global News 24.
At Tesco, we've price matched Aldi on hundreds of products like bananas, peppers, chicken breasts, mushrooms, Warburton's bread, strawberries, even avocados. That's Tesco products at Aldi prices. Because now more than ever, every little helps. Tesco. Prices checked on comparable products from GBLD stores and online twice weekly. Price most often found matched excluding promotions. Selected Tesco stores excluding Express and all Northern Ireland stores. Products and their availability vary weekly and by store. Details at tesco.com/Aldi price match.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
It's TuneIn Sports on this day. On this day in 1980, Larry Bird beats out Magic Johnson for NBA Rookie of the Year.
Larry Bird and Captain Black, Irvin Magic Johnson.
You know, I see all these highlights. Haven't seen a lot of them for a long time, but, you know, I played for the Boston Celtics, if you didn't know that. I'm very proud, too.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Today I'm signing an executive order to protect and uphold the free speech and rights of the American people. Currently, social media giants like Twitter receive an unprecedented liability shield based on the theory that they're a neutral platform.
The President of the United States weighing in on the situation in tech and Twitter, very much in the firing line. Your price action this morning. Good morning to you all. Alongside Tom Keenan, I'm Jonathan Ferro, together with Lisa Abramowitz. You are listening and watching Bloomberg Surveillance. Equity futures are down 7 on the S&P 500. We are negative 0.25%. Outside of that, no big moves in the bond market. Treasury yields on a 10-year maturity come in. Call it 2-3 basis points to 0.66%. In foreign exchange, we've already talked about it so much this morning. The euro advancing, euro dollar up by around about 0.5%. So that's the cross-asset story. Within equities, Tom, I think it's become a real issue for the likes of Twitter. What next from the White House, and what will it mean for social media companies?
There's no question about that. Daniel Ives is with Wedbush Securities. We'd love to talk to him about the back and forth of the tech crew, the FANG stocks, and the rest. But we begin today, and yes, we'll get to China in a moment. We begin with Mr. Ives today on Twitter. Dan, I want to ask you a broader general question. Is Twitter a news organization?
I mean, it's a good question. And I think what this latest back and forth is on Section 230, is really highlighting some of the slippery slope that can now take form as Trump and Dorsey continue to go back and forth. And I think that's why the worry for investors is, okay, where does this lead to? What's the next step? And it's all about the R word, regulation. And that's something investors don't want to see.
Well, even if we don't get the regulation, Dan, what happens if the President of the United States comes off the platform, quits the platform, deletes his account? What would actually happen, Dan, to a stock like Twitter if that happened?
Oh, that would be a net negative. I mean, stock would sell off. Because many would view it that one of the best things that ever happened to Twitter was President Trump. Relative to the platform and the engagement that you've seen there, it's all about engagement. And I think that's why I'd be shocked if he ultimately did that. But it speaks to right now the can of worms that's been opened from a stock perspective is more of a headwind, as you look at a name like Twitter relative to this latest back and forth between the Beltway and big tech.
So you talked about regulation, the R word, and people talked a lot about it last year. This year, it seems to have evaporated from the conversation as people take a look at big tech as being the most resilient among companies amid the COVID-19 downturn. How much pressure will there truly be to regulate big tech at a time when they actually have the cash war chests to go out and support other businesses, buy other businesses, which they're doing, and potentially keep employing people?
Yeah. It's a great question, and I think it was in the background. But now, even in a COVID environment where the strong are getting stronger, and we see that with many stocks at all-time highs, I think it's actually coming back like a tsunami going into the summer and fall. Because you're going to see more and more scrutiny of these business models. We continue to think it's likely fines, but especially going to be big scrutiny on any sort of M&A, as the Beltway versus big tech is going to get some more gasoline in the tank as it goes into the summer and fall with this battle. And COVID's really highlighted as the strong get stronger in just a dark macro.
Well, Dan, you've brought up the acquisition story, but I just wonder if they've already won. They're already big enough and they're just going to ride this secular wave for a long, long time to come and just get bigger organically. What do you make of that argument, Dan?
It speaks to why we think FANG names are up another 20-25% this year, and why it's been a green light to own these names as sort of safety blanket names in a storm. But on the other side, they're offensive names too, from a share perspective, and you're seeing that across e-commerce, streaming, as well as cloud.
Let's segue here. John, there's a guy out on Twitter going after a Daniel Ives of Wedbush. He says, Dan Ives / Wedbush out with a new Tesla pump piece. Still no proxy. They should have a disclaimer and a fact check on that tweet, I would say. Dan, let's shift it to China right now. What does Apple do about the press conference today? How does Tim Cook position himself with their massive China reach, given the news events?
Cook and Cupertino, they're in the eye of the storm, and we've talked about it, both from a supply and demand perspective. Supply chain, I mean, from an iPhone perspective, it's Foxconn, and that's where they've made the big bets. And the demand perspective, 20% of iPhones, based on our estimates, are going to come out of China over the next year, especially with iPhone 12. And that's why for Apple, this continues to be a slippery slope, because China continues to be the core in the supply as well as demand, and they are the poster child for any weakness and any headlines we saw last year, and that's the worry from an investor perspective.
Okay, but isn't that like the easiest target for President Xi to, in a phased-in or gradual manner, say, okay, enough of this, we're going after the motherlode, Cupertino? Do you expect that?
And I do not, and it speaks to our position over the last year, because they are one of the most strategic players in China. Even when you look at how many they employ in terms of within China, the multiplier is over 1 million employees. So it comes down to that's why Cook's relationship in China and what they built is so important. And that's why I think the bark's worse than the bite when it comes to Apple in China, as we've seen over the last year. And any sort of headline sell-off, we be buying, as I think that continues to be, in my opinion, just not valid relative to what's going to happen.
Dan Ives of Wedbush on the situation with Big Tech. Dan, fantastic to catch up with you, sir. Lisa, we touched on it just a little bit, the M&A story, and I pointed out that maybe they don't need to make the big acquisitions, but that's only one part of the story. Beneath the surface, there are deals that are being made that we miss, and we miss a lot.
Well, yeah, and the conversation changed from regulating these big tech companies last year to that absolutely disappearing this year. And actually, Alphabet, Amazon, Apple, Facebook, and Microsoft have announced 19 deals, which is actually the fastest pace of acquisitions for a similar period going back to 2015. This according to Refinitiv data. So if the regulators have their eyes set on big tech, they haven't really been focusing on them just yet.
The kind of deals that I don't think many people have paid enough attention to, with the exception of those that actually really closely follow tech. And that's the issue here, Tom, isn't it? Anyone who has a good idea, a small company, the big guys just come in and take it out.
Yeah, there's no question about it. I mean, I'm putting it out on Twitter right now, John. I'm putting out a tweet that says Faro TV worships Juventus. Fact check it, and we'll see what happens.
I think I can fact check that right now. I think everyone who's familiar with who I follow knows I'm not a Juve fan. Although I do think that the fact checks on Twitter right now, Tom, are probably a little bit more delicate than the football team that I currently support. Tom Keane, he's here all morning on Bloomberg TV and Bloomberg Radio alongside me and Lisa Abramovitz. We are counting you down to the market open, 95 minutes away here in New York City, with equity futures down around about 6 points on the S&P 500. No drama here. We're down 0.2%. Outside of that, in the bond market, Treasury set up as follows. Yields come in 2-3 basis points on 10s to 0.66%. And in foreign exchange, the story of the morning and of the last couple of weeks has been a stronger euro. From New York, this is Bloomberg.
Why?
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Airbags to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. save lives.
This is a message from the RNLI and Her Majesty's Coast Guard. Beach lifeguards can't be everywhere this summer, so they can't always protect your family, but you can. So keep an eye on your loved ones. Avoid taking risks in the sea. Don't use inflatables. In an emergency, dial 999 for the Coast Guard. Get more advice at rnli.org/beach2020. Thank you.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind, giving up. I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
Talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
It's hard enough to forecast where the economy is going to be going over the next several months or quarters. Forecasting where potential output will be in the next several years is even harder.
This is not your father's or even your grandfather's IMF.
The most we can hope for, I think, out of D.C. is a pumping of the brakes and slowing down action on U.S.-China escalation.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. This is Bloomberg Surveillance. We are thrilled you're with us on Bloomberg Radio across this nation and worldwide, and on Bloomberg Television as well. And on a Friday, as we leap into June, we're looking at any number of topics. One of the great things we know with the Twitter uproar, and then we've got the tragedy that we see in Minneapolis, and it's China, China, China really front and center. And John, you can bend all of these topics away from the markets, and you get to the president's press conference, believed to be this afternoon.
Yeah, and what's the focus of that news conference going to be, Tom? It's supposed to be on China, but I imagine we're going to get distracted by some really important domestic issues very quickly. Yeah. We touched on this in the previous hour. We'll build on it in the next hour as well. Just the cross currents. We've rebuilt this risk appetite in the more cyclical areas of this market in the last couple of weeks, Tom. And it comes at a time when the tension between China and the United States is building. And I just think that's a really interesting compare and contrast for us over the next 60 minutes.
For our global Wall Street audience on television, on radio, there's no question about it. It's a reset for June. Many people thought this pandemic would be over in June. Not. But it is a reset. Lisa Abramowitz, the bonds are always out front of the equities. What research item will you look for this weekend? What is the theme you're going to be studying as you read this weekend?
Well, I think that you both nailed it earlier in the week when you really homed in on the idea of yield curve control and how much would the Fed decide where to put that. Also, how is the Fed going to launch the next programs that it has lined up, the Main Street lending as well as lending to municipalities. But look, honestly, bonds have been so calm and you've seen money just flood into credit. My question is, when does the Fed run out? When do the bankruptcies overwhelm what we're seeing, which is a strong bullish tilt, Tom?
Anybody that knows the simulcast knows where I am on yield curve control. John, let me ask you the dumb question of the day before we get to an important interview with Mark McCormick here of Toronto Dominion. John, how far out the yield curve does yield curve control?
Well, in Japan, it goes out 10 years, and I'll be surprised if the United States does the same thing, because what we've heard so far is they want yield curve control to complement calendar-based forward guidance. So think about that. If the Federal Reserve is going to turn around and tell us they'll keep rates low for several years, then basically what they're telling you is that the Fed funds rate and the yield curve out to, say, 3 to 5 years should be in line with Fed funds. And, Tom, I don't actually think it's as dramatic as it sounds if that's the way they go, because the market is already priced for that.
Right, it's going to be fascinating to say the least. Let's dive into it right now. We've had some great conversations through the morning, and let's get started with Mark McCormick. He's at TD Global Bank out of Toronto, and of course working in the foreign exchange space. Mark, let's reset right here, because I know John wants to get the euro and the other noise that's out there. What I want to know is, I want you to reaffirm your dollar call into June. What is it?
Yeah, so we're still broadly bullish on the U.S. dollar on both G10 and emerging markets. I think what we're thinking is there's way too much optimism priced into the global economy. We know that there's a lot of focus here on the reopenings and how much impact that could have on the mobility and businesses, and refueling some optimism across different parts of the global economy. But for us, when we look at the dollar, we look at other risk metrics like global equities against our global growth indicators, what we see is that there's a massive disconnect between sentiment and the actual hardline data, which we are much more focused on. So for us, we're still bullish the dollar right now, regardless of some of the things that we've seen in Europe, largely because the dollar should be a reflection of the global economy rather than the optimism around some of the softer measures like reopening status.
Mark, the argument people would make, though, is that as risk appetite builds and sentiment improves, you fade the dollar and you go to places that are a little bit more exposed to that cyclical story. You go to Europe. What's the pushback there?
Well, I think part of it has to do is there a premium in these other currencies that offer some value? Like, I think a big part of the dollar weakness in the last month that we've seen is really about positioning. Our broad-based positioning metrics did show that the dollar long was about 1 standard deviation, 1.5 standard deviations against emerging markets. So there's clearly a position angle that people have been pushed the wrong way. They've gotten out of these positions. They got back into risk. But what matters is there a risk premium to price out? Is there value in trying to push the dollar narrative any further? And so what our tools and models are telling us is that the dollar's trading at a bit of a discount right now on some of the short-term metrics. So I think to drive the bullish risk story, one, we need the global growth story to comply. Two, we need to see geopolitics move in the right direction. That's what we've seen out of Europe. But the other thing is we need to see value in some of these risk assets, which there is no value. And largely what they're telling us is they're trading at a massive premium to global growth. And one side of that is you look at MSCI World, is trading at a 15% premium to the level implied by our global growth indicator. So that's close to a 1.5, 2 standard deviation excess valuation on global risk assets.
Mark, when do fiscal deficits start to matter again for currencies?
That's a great question. I think it's something that the market's trying to work around now. We've looked at these backtesting thematic regime tools that we've tried to look at. Can we trade the twin deficit? If you traded the twin deficit trying to sell currencies on that theme since 2016, you've lost money, largely because you've been short the dollar, and the dollar's basically redefined the trends of whether or not you want to be short twin deficit currency. I do think, however, this will matter in the back half of the year. Largely, I think where the twin deficits are going to matter the most is for currencies like sterling and currencies like the Canadian dollar, because they don't have the reserve status of the U.S. dollar. They don't have the drive and the innovation that comes from U.S. corporations and the ability to capture global equity flows. So sterling, to me, is really one of the things you want to keep your eye on for the twin deficit story, largely because fundamental models do tell you that we should be trading around 120, but also we see a massive sizable current account deficit that needs to be funded by foreign investment. So I do think you have to think about, we could trade the dollar from a twin deficit story negative in the back half of 2020. But I think right now your two currencies you need to focus on for twin deficits is CAD and sterling weakness.
Well, let's talk about sterling, Mark. It's not called the North Atlantic peso for nothing. It has been vicious for the last few years, especially after the Brexit vote. Cable right now, 123.66. Are you saying all the downside is 120, or can we get back to the crazy levels we saw a couple of months ago?
So our current trading views is we've been short cable from 123, so we are looking for a move to 118. I think the headwinds are just building there, and the headaches are just building in general. If you think about where the narrative has gone, what we've seen across our models is the market has kind of moved into this short position on cable. We do see a little bit of a discount in cable pricing, but that makes sense given the change in the fundamentals. We have one country that it seems to be moving towards negative interest rates. We have a potential for a no-deal Brexit, which seems to be becoming the baseline scenario. We also have some of these other fundamental problems, but I think the way you want to think about it is there's positive news coming out of Europe, but it's not in the UK. And so when you think about how the market's going to trade this could be euro sterling to 93 cents, but this is most likely going to be cable back down to at least 120. I would emphasize that we're still trying to push the move towards 118. And another trade that we have kind of on linked to this broader story, especially because the the UK seems to be lagging on the lockdown and some of the reopening side of things, is sterling yen.
I just want to say to our audience that Mr. McCormick, I mean, this is for Global Wall Street, must listen. For the rest of you, where you're like, what is he talking about? These are hugely bold outlier statements by Mr. McCormick versus much of consensus right now. Mark, what does consensus get wrong? Is it all hinged on what Germany and France are going to do in Europe? I mean, is there going to be one little disappointment that gets these many calls to shift the TD Securities way?
Well, I think what the market needs to understand is the euro is a pro-cyclical currency, which means that the euro should care a lot about global growth along with European growth. And so when we overlay our growth models and our growth tools, it tells us the euro should still be about 105 to 107. And I think another thing is you have to think about the correlations you have between the renminbi and the euro as kind of the anti-dollar trade. So we are fundamentally bullish euro on a forecast. And our forecasts go out to next year, and we've been basically more bullish than forwards, and we've actually been probably more bullish than consensus. But I don't think as a tactical trading strategy, it's time to be extremely bullish on the euro right now, largely because we don't see these discounts that everyone seems to be focused on. Short positioning is not a thing that we're catching in our models. We're actually seeing euro is long at a very neutral level. So I think the most important part to think about the euro is this move that we've seen on the Eurozone Recovery Fund is huge, and it could be a game changer, but it's also a process that will take months. And this is not a front-loaded, growth-driven type of policy shift. And the euro absolutely needs to outperform other currencies on growth in the next 6 weeks to maintain the edge that it's built in the last month.
Mark McCormick of TD Bank. Mark, send our best to the team. Always great to catch up with you, sir. Thanks for joining us, mate. Tom, that's the story for us this morning. We've had two people line up and push back against the euro optimism. Mark McCormick of TD Bank and Ibrahim Ragbari of Citigroup in the last hour as well. Just not buying the story and the optimism out of the continent. Yeah.
What's interesting, folks, within this, and it's not long this or short that, buy this or sell that, John, it's the nuance of fragility almost in the call of stronger euro, where people are saying, okay, we've got to observe that. Maybe it's true, but they really don't want to commit to it, do they?
No, and it's a difference between understanding the sentiment shift and the fundamentals. Quite clearly there has been a sentiment shift, shift in the conversation in Europe. But on the fundamentals, Tom, even if they get together and all support this money, this help, this fiscal stimulus will not be deployed until early 2021. That's a lifetime away in an environment like this one, Tom.
Well, again, I'm going to go back to the labor economy that Lisa was talking about, John. That is truly, that's not funny, folks. It's a lifetime away. There's no question about it. There is a labor crisis right now. And, John, that dialogue is going to change next Friday.
Couldn't agree more. When we get the payrolls report next Friday, the conversation will shift on this program too. Next up on Bloomberg Radio and on Bloomberg TV, we'll catch up with Myron Brilliant of the U.S. Chamber of Commerce. That's next right here on Bloomberg Surveillance.
Now, with the latest news from New York City and around the world, here's Michael Barr.
Lisa, thank you very much. State police in body armor and riot gear lined up this morning near the Minneapolis police precinct that was set ablaze by protesters overnight following the death of an unarmed black man this week in city officers' custody. Mayor Jacob Fry.
We will continue to patrol the 3rd precinct entirely. We will continue to do our jobs in that area.
Minneapolis City Council Vice President Andrea Jenkins was asked if the situation in her city has spiraled out of control.
Yes, it has. It is very much complete chaos, it appears, or it was, and seemingly now we can get things a little bit more under control.
Twitter has added a warning to one of President Trump's tweets about protests in Minneapolis. The company says the tweet violated the platform's rules about glorifying violence. President Trump has been at war with Twitter since earlier this week when it applied fact checks to 2 of his tweets about mail-in ballots. Live from the Bloomberg Interactive Brokers Studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Oculomotor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT. Computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from Bloomberg.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert. Control the virus. Save lives.
The Fed actually hasn't done a lot in the credit markets at all.
But what's happening is there's a sense that the Fed will be there for emergency reasons or to provide for markets to actually function effectively.
Rick Reeder of BlackRock weighing in on the situation in credit. What a year it has been. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance Live on Bloomberg TV and radio. And Tom, I won't go to the market check. I just want to go to a stat. In around about 149 days so far in 2020, we have had $1 trillion of U.S. investment-grade credit issued. Absolutely unbelievable, and largely because the Fed has helped keep the door wide open for these companies to issue a heck of a lot of debt in a short amount of time.
Clearly unusual times. And again, John, we're going to see this with Michael McKee's important interview with Loretta Mester coming up here in a bit. I believe you're involved in that. And that's really going to be the discussion on the balance sheet. The discussion of this is not only, John, about the American consumer, and there's been a huge focus on that with this pandemic, but also about American business. What's so important about the U.S. Chamber of Commerce, which I guess is a lobbying group, is its founding in 1908 was an international delegation to Japan. At the time, that was extraordinary. And then President Taft really driving forward the founding of the chamber to the modern day of this controversy and that, but also the representation of business abroad. Myron Brilliant is involved with this as head of international affairs for the chamber, and he joins us now. Let's say, Myron, you and the crew were to get on Cathay Pacific tonight, and Monday morning you're in Hong Kong or in Beijing to bring a business delegation in. It's not going to be a normal meeting, is it?
Well, Tom, I wasn't alive in 1908 when the U.S. Chamber of Commerce was created by President Taft's support. But I can tell you that our mission hasn't changed, right? We know that we have tremendous interest in selling and exporting around the world. And of course, Hong Kong has been an important gateway to China and to Asia. And we do a fair amount of business, $67 billion of trade and investment between Hong Kong and the United States. So if I were landing today in Hong Kong, I'd be very concerned about Hong Kong's future. We issued a statement earlier in the week about this, and we are concerned.
Okay, but this is really, really important, Myron. We've got a press conference coming up with the president this afternoon. If you were to get his ear or Mr. Kudlow's ear or somebody else's ear, Myron, what would you say to them about how to handle this exceptionally delicate time?
Well, look, the China-U.S. relationship has never been more complex, and I've been involved in it for about 30 years. I was there lobbying for China's accession to the WTO and getting rid of the annual MFN status debate in the 1990s. So I know the history here, but China-U.S. relations are much more important on the national security front, on the geostrategic front, and of course on economic terms as well. So what I would be saying is that I think China does need to have a response from the U.S. government. Of course, the business community doesn't want to have the collateral consequences of that, but there has been an action taken by the Chinese government that is an erosion of the one country, two systems approach that has served Hong Kong well, has served, of course, Hong Kong as an international community, a financial hub, a rules-based economy, and I think it served China's interest well. And this action taken by China to adopt a new national security law, I think, undermines that confidence and creates instability and insecurity and adds to a plethora of issues that already exist in the U.S.-China relationship that are complex and challenging, from technology to trade to Hong Kong, obviously, human rights and other issues as well.
Well, uncertainty is the key word here, and that was the prevailing sentiment among businesses and C-suites when we saw the trade tensions ramping up between the U.S. and China. Now there's a question of the uncertainty of whether the Phase 1 deal is off the table, whether we're going to see the U.S. take measures that increase sanctions or tariffs on China. How much are you worried about that uncertainty, that lack of clarity on the U.S. response and what China will do in retaliation of the effect on U.S. businesses?
So first off, we very much supported the U.S. administration's effort to try to address unfair trade actions through a trade negotiation. And we were very much supportive of the actions around intellectual property, around technology transfer, of course, trying to deal with some issues that were not addressed in phase one, like subsidies and state-owned enterprise structures and things like that. However, we believe that phase one agreement is in the interest of both China and the United States, and it provided some stability. China has not fulfilled all of its obligations under its phase one agreement. This is going to be another issue of tension and has emerged as one in the last few weeks. But I think that the negotiations between China and the United States on the trade front has been, to some extent, isolated from the broader political challenges in the relationship, and that's a good thing. We want to see China and the United States work through these difficult trade issues because the stakes are so large for the economy of China, the United States, and, of course, the global economy. But that said, this is an issue that is coming to the forefront because it's been a very difficult environment with COVID-19. The pandemic has, of course, created a challenge for China to purchase all the goods they should be purchasing from the United States. And I think they've been a little slow in implementing some of their obligations around financial services and IPR, although they have taken some steps in that direction. I hope those negotiations get fully implemented. I think the phase one agreement is something we supported very forcefully. We provided a lot of input to our government. We talked to the Chinese government about it. But that's a floor. That's not a ceiling in this. And there's so much more work to be done to improve the commercial relationship between China and the United States. And we're going to continue to be advocates in that front.
Myron, brilliant. We look forward to continuing the conversation of the US Chamber of Commerce. Tom, here's a situation for me. We can't really stress test the phase one trade deal if all economies are locked down. The real story, the real test will be in the next several months as we reopen. If these tensions continue to boil over, does China follow through on its commitments that it signed away in the middle of January? That's the real test for that phase one trade deal. It's over the next several months.
I totally agree. But you know what I did yesterday, John and Lisa? I got out that map, that Google fancy map. Even I can use that on my phone. And I looked across that beautiful causeway in Hong Kong with a little trolley going down, and all the banks are lined up. And, of course, the only thing I knew in Central District was the Mandarin Hotel. So I'm looking at the Mandarin, John, and right down the street, like literally 2 buildings down the street, is J.P. Morgan. How do the big banks react to this? How do they lobby Washington? What do they do in Hong Kong to advance their plans over the next 1 week or 1 year?
This is why I struggle working with you sometimes, because you ask really serious questions, but my mind starts to wander. Is that what you do in the You sit there on Google Maps with a beverage of your choice and go to places like Hong Kong?
Yeah.
And just click the button, the mouse button, and just go around the city?
Yeah, I do. I mean, Lisa knows I do this. I mean, you get Google Map out, Lisa, and you check things out, right?
Well, yeah, that's clearly, I've got to be honest, that is not, John, how I spend my afternoons, looking at Wikipedia maps of Hong Kong. But I appreciate it, John.
That's not what I do. I think Tom's just reminiscing about the bar that he was once in a hotel in Hong Kong many years ago, and he can tell us more about that another time. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance Live on Bloomberg Radio and TV.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg Money. You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath, or scoring extra poppadoms with your takeaway, or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage. Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
From New York City this morning, good morning to you all. This is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio and TV. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. 1 hour out from the opening bell in New York. Your price action as follows. On the session, we are negative by 10 points, down a third of 1%. Coming into Friday, positive on the week by around about 2.5% on the S&P 500 on this shortened trading week. On the month, as we close out the month of May, up around 4%. In the bond market for treasuries, the shape of things as follows. Yields just starting to push higher. Over the last few weeks, we've started to see this curve steepen again. Today, yields come back in, down by 3 basis points on a 10-year to 0.66%. And in foreign exchange, I think we've gone on and on about this through the morning, but it has been the story for the last couple of weeks. Euro dollar out from 108, Tom, through 111 and positive 0.5%. That's a stronger euro, and optimism just starting to build a little bit more this week.
There's no question about it, and we'll continue that discussion here through the day and, frankly, well into next week as well. Right now with us, someone, and I always go back, folks, to his fabulous interview with Jeff Bezos of a number of years ago, David Rubenstein, with his efforts here at Bloomberg, with Leadership Live and others, to speak to people directly and at length about the sensitive issues of their business. Mr. Rubenstein, clearly with the Carlyle Group as well. David, well-timed with the leadership of YouTube. I find people glued to the product, glued to YouTube, but there are real issues here, a la the Twitter upset of the morning with the president. There's real issues of how YouTube will police itself. What did you learn?
Well, YouTube, when I talked to the CEO yesterday, Sue Wojcicki, and she was the person who actually rented her garage to Sergey Brin and Larry Page when they were starting the company, and then she became, I think, later the 16th employee, and then later when she was an employee there, she recommended they buy a little company called YouTube, and now it's become a behemoth. It was an awkward situation in the sense that we didn't really know exactly what President Trump's executive order said, because as I was interviewing her yesterday, it hadn't yet come out. But she basically said that they do the best they can to police the things that come on. She didn't use the word police, but if something is inaccurate on YouTube, they try to take it down. And so you have I assume hundreds and hundreds of people who watch what goes on YouTube so they can make sure that it's not filled with things that are wrong or inaccurate or dangerous.
I look, David, at the time that we're in with the invention of this new media property. The valuations that are being put on these properties. My question of the morning, which I say to you with great respect for your financing of all this, are these things news organizations? Is YouTube, is Twitter, is Facebook a news organization to David Rubenstein?
Well, of course, nothing rivals Bloomberg as a news organization, I would say. But there's no doubt that many, many people, particularly younger people than me, get their news from YouTube, from Twitter, Facebook, in ways that I would have found surprising. In other words, I go out and buy the newspapers every day. I still physically buy them and read them in the hard copy, but very few people do, including none of my children do. And so people get their news from these other kind of sources. So for many people, YouTube probably provides more news to people under the age of, let's say, 30 than the New York Times, the Washington Post, or the Wall Street Journal. So yes, they are news organizations in that sense.
David, the idea of leadership right now has a pretty interesting meaning, especially as the Twitter spat with President Trump heats up. And as we see Twitter punished in stock markets for their actions, and Facebook, which has not taken similar actions, rewarded by stock investors. How do you, as both an investor as well as a watcher of how these trends are evolving, view leadership in this capacity? Where does the responsibility lie? With society or some kind of greater good kind of concept, or with just the bottom line?
Well, 2 points. One, clearly the market doesn't like controversy. So if you are in a kind of a spat with the President of the United States, it's probably not going to help your stock. That would be my guess. If you are saying good things about the President of the United States, in this context, maybe it doesn't hurt your stock. It may help your stock. But generally, I think there is a responsibility of all organizations that have this kind of dissemination of information to try to be reasonably accurate. Now, obviously, you don't want censorship, but you want people to make certain that they don't watch YouTube or Facebook and see something that is defamatory about something, or something anti-Semitic, or something that it deals with the racial overtones that are just inappropriate. So it's a tough job, and I wouldn't want to be one of the people who had to figure out what is appropriate and what is not appropriate. But there's no doubt that as we go forward as an investor, more and more value will accrete to these type of organizations, because that's where people are getting their news, that's where people are watching.
David, you recall that video that leaked out of Facebook a number of months ago with Mark Zuckerberg talking about Senator Warren saying we're prepared to go to the mat if they try and break up this company. You speak to the leadership of these tech firms. Can you give us a sense of the kind of things that they are worried about coming out of Washington, D.C., the things that keep them up at night, the things that scare them?
Well, Will Rogers, the famous humorist in the, 1930s, used to say, the country's never safe whenever Congress is in session. And so people in Silicon Valley are always worried that Congress or the administration will do something. But as we've learned in the Microsoft lawsuit and other kinds of things, these things take a long time to get done, if they're going to get done, and it's not that easy to break these companies up. On the other hand, AT&T was broken up, and Standard Oil was broken up many, many years ago. So I don't see any of these companies being broken up, but they might change the way they operate, and they certainly are spending more and more time in Washington letting members of Congress and members of the administration know their pluses.
David Rubenstein, an open question on a Friday as we stagger into June with this pandemic. We are seeing a massive economic contraction out of the 30s. As you know, the Mellon family was hugely charitable in Washington a lifetime ago. Are we going to see the combinations and the transactions that lead to combinations because of this economic depression like we saw in the 30s? Are we going to see one big roll-up?
Well, I don't know we'll see that, but I do think that we are going to find more and more pressure being put on the wealthiest people in the United States to give back to society, and obviously many of them are already doing that, but more and more philanthropy will be required to meet the gaps that government can no longer meet, because government won't have the resources, not going to have the budget to be able to do all the things that it has done over the last couple of years. And so more and more philanthropy will be expected, I think, of these wealthy individuals who benefited from a lot of the tech increase in value. And I think you'll see more and more pressure for people to do more where government can't do it. Remember, we're running big deficits and big debt, and I think the government at some point is just not going to be able to pay for all the things that it's been paying for.
David, always great to get your perspective. It's valuable to us, so thank you for joining us this morning. Really appreciate your time, sir. Just want to talk about this data very quickly. Lisa, I know you've picked up on a similar story. Consumer spending plunging in America. We expect that. What's been an interesting quirk of things just in the payrolls report, and we see it again this morning, is personal incomes picking up at a time you'd expect them to be plunging. And there's several reasons for that, but let's talk about them, Lisa.
Well, the idea is that the enhanced unemployment benefits actually increased the take-home pay of a number of individuals. And people have talked about this. It's very controversial. People saying, trying to cast it in political terms, but it just actually is the fact. You actually saw personal incomes rise, or personal incomes rise by 10.5% in this data that was just released. To me, that's fascinating. I'm wondering when we're going to see that in the spending, which we really haven't seen yet. But you have to think, John, at some point that does provide a support to the economy.
Well, let's bring in our colleague, Bloomberg's Michael McHugh, can weigh in more on this data. We saw the payrolls report, the wage growth figure pick up there for a different reason, Mike. Personal income picking up here for another reason. How does it shape your thoughts on this economy and the recovery in the months to come?
Well, it tells you, John, how dependent the American people were on government handouts during the month of April. Lisa's right. We saw government transfer payments to individuals rise by 89.5% during the month. That's where the increase, the 10.5% increase comes. Wages and salaries fell by 8% during the month. So the money that was out there came from the government at this point. As for the spending, the savings rate went up to 33%. People took that money and put it in the bank, which is why we're not seeing big spending numbers on the month. It tells you how bad things were during the month. It doesn't give you really an indication of where we're going to go from here in May.
Michael, I would suggest this interview with the gentle lady from Cleveland is exceptionally important. You and John Farrell will speak to Dr. Mester here, and I believe it's about 9:15, folks. That's an important interview. Tell us why it matters, Michael.
Well, the Fed has to decide right now whether it is going to put a floor under the economy as it's done, or go beyond that and start stimulating. When do they add something to their monetary policy to get people out the door and start spending that money that they have saved? And that's an important question. Their meeting is coming up on June 10th. This is the last day before the Fed blackout. We'll hear from Loretta Mester later. We'll hear from Jay Powell, get an idea of what they're thinking. That'll matter to people in the markets.
I'm just wondering, going forward, we're seeing an increase in incomes, a decline in personal spending. How noisy is this data? We spoke about this yesterday with the jobless claims and the idea of how things are tabulated. How much can we actually read into this?
Well, in general, you can accept the numbers. The Commerce Department, the Bureau of Economic Analysis, put a note in saying that it is very hard to separate out the impact of COVID from the impact of everything else that happens in the economy. You just have to take the numbers at face value, even if they're not completely correct, and you have to wonder about the wage and salary numbers, how many companies were actually reporting. You know that the government figures are accurate in terms of transfer payments, so you know that we were relying heavily on government support during the month. We hope that we can get more and more participation from independent companies as the months go on and we continue to gather this data.
Michael McKee, great to catch up with you, sir. We'll see you in around about 35 minutes. Tom, we did ask if you could be part of that interview, and Loretta returned messages to us and basically said, not if he asked us about yield curve control. We know how angry he is. So basically, it's just going to be Mike and I a little bit later this morning, Tom.
Actually, she like Contra Lakota is actually maybe the most prodigious mathematics ability of the presidents and the governors. Maybe John Williams will correct me, but I will tell you that if anybody knows the dynamics, John, of yield curve control, it will be Loretta Mester.
Couldn't agree more. Really looking forward to the conversation. It comes around about 9:15 Eastern on Bloomberg TV and on Bloomberg Radio. Counting you down to the opening bell around about 50 minutes away in New York City. Equity futures are down 13 on the S&P 500. We are negative 0.4%. From New York, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Brammitz. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. State police in body armor and riot gear lined up this morning near the Minneapolis police precinct that was set ablaze by protesters overnight following the death of an unarmed black man this week in police custody. Minneapolis City Council Vice President Andrea Jenkins says the destruction cannot continue for a fourth night in the city.
We're going to need everybody to help with this. People who are on the side of righteousness and justice need to really step forward and not let this happen again tonight.
Meanwhile, the governor of Minnesota, Tim Walz, says he will hold a press conference later this morning. At least 7 people were shot in Louisville overnight as protesters demanded against the killing of Breonna Taylor, a black woman fatally shot by police in her home in March. President Trump is ordering that part of the Communications Act exempt social media companies from liability for what users post to be reviewed. He spoke almost exclusively about Twitter, his platform of choice, after 2 of his tweets were fact-checked on Tuesday.
One egregious example is when they try to silence views that they disagree with by selectively applying a fact check, F-A-C-T, fact check. What they choose to fact check and what they choose to ignore or even promote is nothing more than a political activism group or political activism.
Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. It's not just anecdotal anymore. There's mounting evidence now that some homebuyers are fleeing urban centers for more far-flung neighborhoods.
You know, if you look at what surveys are suggesting, where there's most traffic for home searching and most interest in terms of web searches for homes, it tends to be more coming out of urbanites than currently folks living in the suburbs or rural areas.
And Michelle Meyer, head of U.S. Economics at Bank of America, says multifamily apartment prices may fall more than suburban single-family homes.
I mean, multifamily seems to be a bit more vulnerable, in part because of its concentration in urban centers and because multifamily did have a faster run-up in activity in the last cycle than single-family. Single-family always kind of lagged and was very lackluster in terms of the growth.
Toll Brothers says deposits for new home purchases has jumped in recent weeks. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Connecting to...
The moves may be choreographed, but the drama is real.
I dare you! I beg you to come down here right now!
Stay on top of everything happening in the pro wrestling universe with Body Slamming Podcast on TuneIn. For passionate recaps of the most recent SmackDown, check out the What's Wrong with Wrestling show. And for a pro wrestler's perspective on life and culture at large, listen to Talk is Jericho. For these and more podcasts, search sports and scroll down to the world of wrestling. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Let's be honest, we all spend too much of our day on social media. But
but at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
There's been an action taken by the Chinese government that is an erosion of the one country, two systems approach that has served Hong Kong well, has served, of course, Hong Kong as an international community, a financial hub, a rules-based economy, and I think it served China's interest well. And this action taken by China to adopt a new national security law, I think, undermines that confidence.
Myron Brilliant there of the US Chamber of Commerce weighing in on a huge issue for us this morning as we look forward to a news conference with the President of the United States, Donald Trump, a little bit later today. Still no time for that address, no scheduled time whatsoever at the moment. As soon as we get it, we'll bring it to you right here on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance, with equity futures down 17 points on the S&P 500, closing out the week just a little bit lighter after a push higher over the last week and month through May. Equity futures down 0.5%. Tom, a little bit later, I'm going to step away and get ready for the TV show through the opening bell. But on TV and on radio, we will be catching up with the Cleveland Fed President, Loretta Mester, and I think the focus has got to be on the next steps and on forward guidance. Looking forward to doing that interview with our good friend and colleague, Michael McKee.
John, it's forward guidance, but you really got to wonder. I'm going to let you go, John, but I'll tell you, folks, this is an important interview to reaffirm the dynamics that we've heard from the vice chairman and from the chairman numerous times, and even from that important John Williams interview of the other day. Right now, we're going to do something we really avoided this morning, which is the May recovery in oil. You may remember before May that Lisa Abramowitz put 3 barrels of oil in her living room. They paid her to take
already
them.
sold
Lisa,
it.
how are those barrels of oil? How are those barrels of oil doing right now?
Yeah, I actually have been slowly selling them. The boys, as we talked about, were complaining about the fumes, although they are excited about the upside and the profits that we're taking right now, Tom.
It can be substantial profits, and of course, she triple leveraged that puppy out, so we're looking from about minus 20.
And first quarter earnings and revenue with the chip maker beat estimates. Marvell benefited from rising demand for equipment used in data centers and 5G wireless networks. On the deal front, you've got Constellation Brands down 2.5%. The alcoholic beverage maker revised a $1 billion asset sale to E&J Gallo for the second time to address U.S. antitrust objections. Constellation is keeping 2 champagne brands, a production plant, and related assets. DXC Technology down 7.5%. The computer services company reported fiscal fourth quarter revenue that trailed projections and suspended its dividend. Autoliv, this is a seatbelt and airbag maker. It's down 2%. Autoliv said American and European business was virtually at a standstill in April. It's reducing employee costs and capital spending by 30% and has lined up $630 million in Swedish government loans. Autoliv based in Sweden as well as the U.S. Nordstrom's down 2.5%. The department store chain posted a much wider loss for the fiscal first quarter than anyone else expected. Sales fell 40% and missed estimates for the 8th straight quarter. And on the other hand, Williams-Sonoma up 9.5%. The housewares retailer sales unexpectedly rose last quarter at stores open more than a year. No doubt benefiting from people cooking at home as they stay at home in response to the coronavirus. And profit and revenue for the quarter were well above projections.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that. Margaret Brennan, Fashion Nation, Sunday morning on the CBS television network. So much to talk about. I don't even know where you and your producers, Margaret, are going to start the show. Talk to us a little bit about Face the Nation this Sunday on the CBS television network. Where are you guys going to start with?
Well, at this moment, it looks like the nation is focused on what's happening in Minneapolis, the explosion of violence there overnight, the president weighing in and being told that by Twitter that he appears to be encouraging the violence by using the phrase looting and shooting. And it just seems a very combustible situation with this overlay of just tension in the country right now as we see protests around the country sparked by police brutality, but really seeming to encapsulate a broader anger in America. These past few months have really pulled us at our seams. And in particular, we've seen COVID-19 have its own inequality. It is disproportionately affecting, in terms of infection, minorities, Black Americans, and in terms of job loss, minorities, Hispanics, and Blacks.
So, Margaret, one of the issues that we've seen here with this pandemic is there really hasn't been a coherent and national strategy to combat the pandemic. It's kind of been state by state, maybe region by region. Here in the greater New York region, Governor Cuomo have kind of banded together with New Jersey and Pennsylvania and some other states here. Is there a sense within the Beltway that there should be a stronger, more defined, more coherent national strategy as it relates to dealing with this pandemic?
Well, I have a copy here of what the Trump administration Health and Human Services agency handed to Congress, saying it was the national strategy, and it's what you just laid out. It was to help provide this to states, but have states really be the frontline decision makers on testing. What I think there is also a call for among medical professionals is the need for a national contact tracing program, particularly if we encounter the second wave that many predict. That is, being able to track down who people come in contact with once they are infected to try to contain that. Also, there's conversation about the need for some kind of federal detection program to locate hotspots to act quickly. All of that is exploratory at this point. There is no plan for national contact tracing. And the testing plan that you just described there is seen by many to be inadequate. But we'll talk about this with Dr. Scott Gottlieb Sunday.
Well, that will be good. A single tweet, as just moments ago, from the president. One single word with an exclamation point, all caps, China, C-H-I-N-A. There it is. Margaret Brennan, you and I have known each other for a long time. I'm going to ask you a delicate question. I called up Sue Zirinsky this morning, and I said, be sure the general counsel's on the phone when I ask this. We want to protect Margaret's ability. Margaret, the Washington Post can fact check. CBS News, through courageous moments, including with Douglas Edwards and Walter Cronkite of a few years ago, would fact check. Does Twitter need to fact check? I say this with immense respect to the heritage of the CBS television network.
Well, that's a broader question of what is it, right? And what is a social media entity? Does it have actual standards of journalism? What should it be? And is this just such a different case because the platform that is being used by the President of the United States reaches so many these days? It's definitely a conversation we've been having for some time on the congressional side of greater regulation for social media companies. What the president tried to do with this executive order this week seems legally questionable, and will face some real legal challenges. But it is once again poured a very, a point of conflict being highlighted by the White House in a moment when many people are looking for some calm.
What will you listen for today in this press conference? You know it's going to be on China, but come on, it's going to be a free-for-all, Margaret. And I say that with respect for the president and the institution as well. You know, you're getting ready for the Face the Nation Sunday. I mean, what are you going to listen for at this really interesting moment in the nation's history?
Oh, gosh, isn't it? Well, first of all, I know the president hasn't made a decision on the policy he's going to choose on China. He's being presented with those options today. The president's tweet, as you highlighted, doesn't reveal a whole lot, but promises something to come. That's spooking markets. I'm going to listen for what that is, because I think in the broader context of everything we are going through, the world's two largest economies, escalating tensions further, is really worrisome. But I'm going to be listening for that. I'm going to be listening for what exactly the president is asking the Justice Department to do in its review of George Floyd's case in Minneapolis. Basically, as you say, it's the unexpected. So brace yourself. But there's no press conference on the schedule yet. But as we know, things can change in a moment's notice.
Margaret, to what extent do you think the escalating rhetoric from the White House as it relates to China really reflect some policy concerns, some real issues, some real meat there, as opposed to maybe just deflecting attention away from the coronavirus and, the blame game that may be taking place within Washington?
It's a bit of both. But what we saw with what Beijing did this week in terms of the national security law adopted with Hong Kong provided a mechanism to force a decision, at least when it came to that very specific Hong Kong Protection Act. And so we know that this is sort of a decision point for the president that Congress forced his hand on, but he can use that in whatever way he wants to. And certainly, as we know, tensions have only been ratcheting up. But at this point, there is a need. The U.S. is still dependent on Chinese production, and the U.S. is still going to need to collaborate with China on any kind of global response to the pandemic. So it's a dangerous moment, but it is politically expedient for both parties. It is a bipartisan issue getting tough on China. It's how you do it and how smart you target the policies.
And bipartisan as the election near stagger into June. Margaret Brennan, thank you so much. Of course, Face the Nation. See it on the CBS television network at 2 p.m. On Bloomberg Radio, of course, in Washington and Boston Newburyport, 106.1 FM. As well in New York. Bloomberg Surveillance this morning brought to you by Cohn Resnick Advisory Assurance Tax. Get breaking tax, legislative, and business insights for financial firms. Cohn Resnick is ready to help. Visit their Coronavirus Resource Center today, cohnresnick.com/COVID-19. Paul?
Tom, let's get some world and national headlines right now with Michael Barr. Michael, what do you have for us?
Thank you very much, Paul. And Tom, it was a third straight night of violent protest in Minneapolis over the death of George Floyd, an unarmed black man in police custody. A police precinct was set on fire by angry demonstrators. Keith Ellison is the state's attorney general.
Everybody is outraged. Everybody believes that this is a grievous violation of Mr. Floyd. And I believe that everybody wants to see these charges filed as soon as they can be.
Minneapolis Mayor Jacob Frey declared a state of emergency from the protests. Minnesota's governor activated the National Guard to try and maintain order, sending 500 soldiers to the area. Governor Tim Walz will hold a news conference later this morning. Twitter has added a warning to one of President Trump's tweets about protests in Minneapolis. The social media giant says the tweet violated the platform's rules about glorifying violence. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom.
Michael Barr, thanks so much. Greatly appreciate that. Paul Sweeney and Tom Keene on a Friday, folks. It's a different Friday. There is an exhaustion to our economics, our finance, our investment, indeed our international relations. It's a kind of weekend where we'll be reading in, getting ready for June. One of the landmarks out there will be June 5th. Of course, I'm going to say in the modern history of the nation, the worst unemployment report that we've ever seen. It will be extraordinary to see where we fit around 20% plus or minus or that. But also there will be a June of thinking about the next steps for our central bank. And it can be themes on yield curve control, themes on forward guidance, then the immovable mass, as Citigroup said this morning, of $9 trillion on the balance sheet. She is the mathematician from Cleveland, Loretta Mester, one of our strongest forces on the Fed. Here is Michael McKee and John Farrow.
City for our audience worldwide on Bloomberg TV and on Bloomberg Radio. Alongside Michael McKee and me, I'm really pleased to say that back with us on this program is the Cleveland Fed President, Loretta Mester. Loretta, fantastic to have you with us back on the show. We just had a conversation with Mohamed Al-Arian a little bit earlier on Bloomberg TV. For our listeners on Bloomberg Radio who may have missed that, he was talking about the risk to the downside of doing more. What are the downside risks for the Federal Reserve of doing even more?
Well, the way I view what we've done so far is, remember, we saw that the financial markets were not functioning well. So we took very strong actions to make sure that the financial markets continued to function so that credit could flow to households and businesses. Without a functioning financial system, we'd have a financial stability crisis on top of a pandemic crisis. So no one would have wanted that. So our actions so far have been, I think, impactful. I think you've seen the financial markets working better. I think liquidity is flowing. And I think those have been important programs that we set up, these emergency facilities. Some of them are still to come in terms of opening for business. The terms are being negotiated with Treasury and to make sure that those programs work well. So that's kind of the state of play there. I think as the economy and more places begin to open up, we'll have a better sense of what the recovery is looking like. And we may have to, and I expect that we'll have to support the recovery going forward. But we're really at the very beginning stages of that because there's still parts of the country that are shut down. So it really depends on what you mean by doing more. I do think there's going to be a second phase of monetary policy, but that'll be more of the supporting the recovery, supporting activity, making sure that we can have a recovery that takes hold and develops.
Well, President Mester, let's talk about that, because quite clearly a couple of months ago, it's night and day compared to where we are now. And I think it would be hard pushed to suggest that it's about market functioning anymore. You've talked about that next phase. If the previous phase, the objective was market functioning, what does the next phase look like? And how are the tools different? How is the response to the Federal Reserve different?
Right. So the way I view it is just think about the second quarter. The second quarter numbers when they come out are going to be very, very negative numbers. I mean, we know that. We know that was the height of the shutdown when there was activity. In the third quarter and fourth quarter, we're going to see activity begin to emerge. I think some of the quarterly growth rates are going to overstate what it looks like really out in the field, because we're going to see from a base of very little activity, some pickup in activity, and they're going to look like big growth rates. But we're still going to be below where we were at the start of the year in terms of both employment and output. So I think we have to take this, looking at how this is emerging. I think there's a lot of concern about second waves of the virus. So what makes this difficult is that we have both economics going on and also a health crisis going on. And so that's very different than other economic shocks that we've had in the past. And so I think a lot of how the recovery goes is going to be dependent on COVID testing, the 3 C's, COVID testing, contract mapping, and making sure that the capacity of the healthcare system can handle an increase in cases that every epidemiologist is telling us that we should expect over the second half of the year. That means that the recovery could be slow. When you have so many people out of work, it's hard to imagine that we'd see a quick V-shaped recovery. I think it's going to be slow. I think businesses are going to be thoughtful about reopening. I think people are going to be thoughtful about spending. And so what that means is that monetary policy has a role to play as we support the economy getting back to our dual mandate goals of full employment and price stability. And so that's more traditional monetary policy, and the tools that we have are our interest rate tool, which already is at zero, forward guidance, which we've used before, and also asset purchases, but asset purchases not to improve market functioning, but really to support the economy as it moves forward towards full employment and price stability.
Well, markets want you to specify exactly when you're going to do what you're going to do, of course. And I'm wondering if the June 10th meeting is a time for you to announce anything new at this point. Your Fed, Cleveland Fed, did a study of the Taylor rule and 5 other simple rules and found that if you used those, you would have the Fed funds rate, your target, anywhere from a negative 2% to a negative 14%. That suggests at this point, you're not loose enough for the economy we have at the moment.
Well, I think those rules, right, are based on the dynamics of the economy, based on history and historical relationships. And if I told you that the unemployment rate, which is now at 14.7%, you stick that into a rule, you're going to get that kind of result from the rules. But right now, we're not really trying up to this point to stimulate activity, right? The economy was shut down as an investment in our public health, right? That was the tool that the country did to sort of try to make sure that the capacity in the healthcare system could build up, more could be learned about the transmission mechanism of the virus. So the work that we've done so far at the Fed and the federal government also was really to get us through the shutdown period, so that when the economy begins to reopen, that's the point where we can support the recovery. And I think that's where the second phase that I was talking about comes into play. We're just at the beginning now of states beginning to reopen. So again, I think we're talking about a future state, right, when we see what the recovery is starting to look like as more of a country is able to reopen. And so I think we're going to have those conversations. But again, I think that comes at a later stage when, right, we know a little bit more about what that recovery point is looking at. And we're collecting data all the time on how the reopening is going. So we have some, information on that, but really beginning stages of that for the country.
Well, you, the Fed, have long suggested that forward guidance is kind of the next tool that you would employ. But when you look at two-year Treasury note futures, they're under 1% out to the end of 2022. And it's raised a question in people's minds on Wall Street. If you give traders just a one-way bet forever, you're going to have problems down the road. You're going to have a taper tantrum if everybody is in on the same trade for years and years.
So I think that's always a concern when we're using these tools at the zero lower bound. We always, whenever we use a tool, at least the way I approach this, is we always have to think about what it looks like at the moment, but also what does it look like in the future, and how would you exit from that tool? So I always approach policy that way, not just looking at the current moment, but also thinking about, okay, what's the path of this going forward? And that's really going to be decided by what happens in the economy. What does the recovery look like? How much accommodation, monetary policy accommodation is needed, right? And then also communicating well so that we're not surprising anyone with our policy. That we want people to understand where we're coming from, what our rationale is, but we don't want to necessarily mislead in some way by saying we know exactly how the economy is going to evolve. And so that's when we got into earlier in the earlier recovery, it was about making sure that people understood that we're not prescient, but we are going to base our policy actions on what the data is telling us about the economic outlook.
Well, President Mester, at the moment, there are people worried about how big the Fed's role is in clearing markets now and how big the Fed's role is in setting prices. And there's been a conversation in the last several weeks with us and your colleagues, including President Williams, about yield curve control. I want to try and understand from you, because this is where the confusion is on Wall Street for some people in fixed income at the moment. Would yield curve control for you be something focused on the front end, the belly of the Treasury curve? Or would you think about doing what Japan is doing, which is all the way out to 10 years? Just how much control over the yield curve, so to speak, would you be looking to have?
Right. So my view of yield curve control is that it really is a support for forward guidance if we were going to do it. Now, the committee has discussed yield curve control as a tool back in 2010 during the financial crisis, and then also as part of our framework review as a tool, a potential tool. No decisions have been made on that at all. Again, I don't think of that as something that would be in this phase of what we're doing to make sure that the markets continue to function. But as a tool, I think it's worthwhile thinking about what those tools are going to be that we can use. But right now, that's a discussion for the future phase. And my own view is that if you wanted to do it, you'd have to think hard about how you would implement it. And also, as I said before, how do you exit from it? Because with any of these tools, right, there are pros and cons of using them. Right now, as you point out, the yield curve is very flat at the short end. So maybe with the forward guidance we've given already, it's not necessary to do something to emphasize that forward guidance. But I don't want to take it off the table as something that's a potential for me to think about as a possible tool. I just don't see that we need it here in this space, nor do I see going forward that we necessarily would need to use it. But if we were to use it, I would view it as a reinforcement for forward guidance on the short end.
Before we let you go, I have to ask you about this. There is the possibility we could end up in a new trade war with China, additional tariffs going on. How would that affect the economy? Have we already absorbed that, or would that be a new hit to the economy now?
Well, I think, whenever there's a new rising up of uncertainty, and then this is another uncertainty, I think we have to take it on board as being another potential headwind to a recovery. So I think we have to just use that as part. We have to take the conditions as they are. I think that we played this game before and sort of saw how the uncertainty did dampen the expansion earlier, and so I think we have to just take that on board as this is another uncertainty added to an incredible amount of uncertainty we already have.
Loretta, we've got to leave it there. I just wanted to say thank you, and thank you for talking to us ahead of the blackout period before the next Fed decision. Really appreciate your time, and hopefully we can get you back on soon. The Cleveland Fed president there, Loretta Mester.
John Farrow with Michael McKee, a really nuanced conversation there to see Mr. McKee. Of course, he's in on the question period with Chairman Powell at the Fed meetings, and John Farrow, of course, with his years of work at the ECB as well. I thought that was very valuable. We're going to drive forward that conversation with someone listening to it before his appearance with us, and that is Michael Darda of MKM Partners, and that's really wonderful. He'll join us here as we get the market open on this Friday, and I think many of the themes that we saw there speak to the tension of June, where we will have this labor economy, as Ms. Mester buttressed up against as well. So I think it'll be really, really interesting to see. The markets this morning, a thing of note, the euro 111, that gets my attention, stronger euro. A great debate on the euro. You need to get the market open. Stay with us worldwide. This is Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a message from the government about the next stage of controlling coronavirus with NHS Test and Trace. To protect your friends and family, testing and tracing must become a new way of life. If you have symptoms, you need to get a test immediately. Don't leave home for any other reason. If you test positive, we will contact you to trace people who you might have infected. From now on, if you're told you've been exposed to an infected person, you must self-isolate for 14 days. Play your part and do the right thing so we can safely return to a more normal life. Go to nhs.uk or call 119. Stay alert, control the virus, save lives.
Helen is dreaming of fighting a flock of 40-foot flamingos. But in reality, she's helping fight COVID-19 in her sleep. Like thousands of others, she's joined the Dream Team. By using the Dream Lab app, they're helping scientists speed up the search for potential treatments. I'll fight you. Keep fighting, Helen. Search Vodafone Dream Lab and join the Dream Team tonight.
Dream Lab app is owned by Vodafone Foundation, an independent charity. Registration number 1089625. Full terms at vodafone.co.uk/dreamlab.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Casting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And the opening bell brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. The S&P 500 lower at the open, down 0.33% on 10 points at 3019. The Dow Jones Industrial Average down 0.5% or 139 points at 25,256. And the Nasdaq is up 0.1% up 8 points at 9375. 10-year Treasury up 7/32, yield 0.66%. The yield on the 2-year 0.16%. NYMEX crude oil is down 2.3% on 78 cents at $32.92 a barrel. COMEX gold is up 0.9% or $15.60. At $17.43.90 an ounce. The euro 1.1113 against the dollar. The yen 107.38. Tom and Paul.
Karen Moscow, thanks so much. Paul Sweeney and Tom Keene, we're thrilled to bring you now to present to you on a Friday Michael Darda of MKM Partners. And this after listening to Loretta Mester, I thought really cogently lay out some of the plans and the hopes of our central bank. Michael, we usually talk to you about a cross-section of things. I just really want to drill down to the Fed and to the moment we are in. Michael, as I wander from the west wing of the Keene Manse and I go back through the dining room and I go far over to the other side of the house where the children hang out, I wander by a library of economic textbooks. Rick Mishkin, Abel Bernanke, Blaug, the great economist from Leuven in London, and on and on and on. None of what we're talking about, Michael, is in those books. Let's start with the first question. Where did all these theories come from?
Hi, Tom. Thanks for having me. Well, I think one thing that we do have, if some standard textbook theory doesn't necessarily apply to the nature of this shock, certainly business cycle history can be helpful. We did go through the Spanish flu pandemic in 1918, 1919. Around the end of World War I, the U.S. suffered a 9-month inflationary recession. The dynamics were quite different in terms of what was driving the business cycle back then. We were on the gold standard. The gold standard was actually inflationary going into and coming out of World War I. So this shock has some similarities and some important differences, with what was happening 100 years ago. So we still have business cycle history to guide us. I still think some of the models can be helpful. For example, when I came on the show and discussed what was happening between the 6th and 19th of March, where real rates were shooting up in the TIPS inflation break-even market and inflation expectations were collapsing, that was a classical ISLM shock, essentially a shock to the LM curve. And the Fed has gotten traction in helping to unwind that.
Okay.
So I think what we need here is a combination of business cycle history, understanding the nature of this shock is quite different than typically what you see with a recession, but also, harnessing our views to some kind of a coherent model, which I don't see done very well.
Okay, brilliantly explained. And Michael, this is why we love to have you on, and that's all great. And if we use the Hicksian model of ISLM and we say we've got LM ability, is there any evidence the central bank can nudge the IS curve? Can the central bank nudge the real economy given all the almost force majeure events we're in right now?
Well, I think, the real economy is going to be coming back based on the evolution of the pandemic itself and how fearful people are. So we already have quite a bit of anecdotal evidence that activity is at least bottoming out in May. So we're basically going to be at the whims of the evolution of the virus itself. If things are dying down and people are getting more comfortable, we will end up getting a pretty forceful recovery, but from very low levels of activity. Because we fell so hard over such a short period of time, even in a forceful upswing, it's going to take some time to get back to normal. It may take even a few years. So I think putting a so-called V-shaped recovery in context, unlikely that you get a perfect V where we fully recover in just a matter of a few months. But I also think there's probably too much pessimism out there that we're facing another lost decade or two for the labor market. The pandemic is not going to last that long. The Spanish flu pandemic 100 years ago, lasted 2+ years. So a lost decade for the labor market really doesn't make any sense whatsoever unless someone is willing to accept policy failure. And that's not what I'm seeing and hearing from fiscal and monetary policymakers.
So, Michael, you mentioned fiscal policy here. The Fed has certainly done its job, and we heard from President Mester that the Fed is prepared to remain vigilant here. How critical is it to the markets to get another round of meaningful fiscal stimulus that may or may not address some of the needs at the state and local level?
Yeah, it's a good question. I mean, that's where the focal point is now. State and local governments obviously are hurting. They had some problems going into this, but the sudden stop in the economy has caused tax revenues to collapse. So something may well need to be done there, and that's where the discussion is headed. But I'd like to point something out in the data that was just released today. We saw the personal income and spending numbers for April. Spending dropped off a lot, as everyone expected, but the income numbers actually increased pretty significantly, and the reason for that was the CARES Act. So the fiscal response was quite forceful to this shock, and the result is that we've essentially been able to hold incomes up despite these disturbances to the labor market and in the halt in spending. So the personal savings rate has spiked up to 33%. So that's above the previous all-time high during World War II. So the resources are in place here to power a recovery if and when the pandemic dies down and households become a bit more comfortable and confident.
So, Michael, you mentioned the unemployment, the jobless claims that we've seen approaching 40 million Americans just since the beginning of the pandemic. Give us a sense of how you think that will come back. Is this going to be, the restaurant workers just hiring everybody back, the leisure industry hiring everybody back, or do you think this is going to be something that's going to be a much longer pull?
Right. So we've got first-time claims that have fallen for 8 weeks in a row. That's a very good sign. That's a leading indicator. Continuing claims, we just saw the first pullback since, the crisis began to unfold, and they're still at extremely high levels. But the continuing claims will be more or less moving with the unemployment rate. So I think we're probably a month or two away from the unemployment rate peaking. It's likely going a bit higher than where we are now, which is incredibly high historically. So as industries start to come back, then we'll begin adding jobs and the unemployment rate will fall. Some of those hard-hit industries will only partially come back, but there'll be new jobs in other areas as well. So we should have a full recovery over time,
Michael,
even if the composition is different.
Yeah, Michael, the thud you heard was vet bill falling off the couch when you said there was a 33% personal savings rate. No one listening to this program believes that, Michael. They have tuitions, rents, et cetera, et cetera. And too many people listening to this program are out of a job. How do we have a 33% savings rate in a 14% unemployment rate America?
Well, we have that, Tom, because you have a huge spike in transfer payments with the fiscal policy rescues that went into place. Plus,
and we banked all that?
We banked a good chunk of it. So, the lockdowns and the shutdowns basically caused people to pull back on spending, but incomes have been supported through transfer payments. And so, the data is what it is. And you can say, well, it's not the private sector. No kidding. That's the point. So the fiscal policy makers reacted very aggressively.
Right.
As this shock started to unfold, and that's the result. So the resources are there for spending to resume. Now, the composition may look somewhat different. We may not get a full recovery in every single sector that was hit, but even with compositional changes, we will eventually get to a full recovery for the labor market over time. It may take a few years to get all the way back to full employment, but that's going to be much quicker than a lost decade, which some people are talking about, and I think is totally off base. Way too pessimistic.
When we invented this program, folks, this is what we were talking about, the conversation of Loretta Mester with Michael McKee and Jonathan Farrow, and then you go over to the analysis and perspective of Michael Darda of MKM Partners. Paul, that's pretty cool, isn't it?
That's pretty solid.
How could you top that?
How could you top that? And it's a Friday.
The only way we can top it is the news in New York City. Here's Michael Barr.
Well, thank you very much, Tom, and thank you, Paul. A CNN reporter and his crew are arrested by police in Minneapolis live on the air early today after a night of continued protest over the death of George Floyd, an unarmed black man who was handcuffed on the ground while police knelt on his back and neck. The crew has since been released. The governor of Minnesota has apologized to the cable network. He will hold a news conference later this morning. Twitter CEO Jack Dorsey tweeting, quote, "We'll continue to point out incorrect or disputed information about elections globally." The social media giant is reacting to President Trump signing an executive order challenging legal protections for such companies. The president is infuriated that Twitter put bright blue fact-check warnings on 2 of his tweets about voting by mail. President Trump is not backing down in the fight over mail-in voting being pushed across the country, with the COVID-19 vaccine still not available. The president says again that widespread mail balloting will lead to rigged election without citing any evidence. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom?
Michael Barr, thanks so much. Paul Sweeney with us. And, of course, folks, it's just a great joy to have Paul with us to get the market open in this 9 o'clock hour. Paul, I think of Bloomberg Intelligence, and I think of all the work as they reset for June as well. Sure. How does Paul Sweeney reset after a VIX from 80 down to 28? I mean, is it just one big case, and now what?
And now what? And I think what a lot of investors are going to be focusing on, Tom, is just the pace at which we reopen this economy. That's kind of where we are here in the pandemic. It's how quickly this economy can reopen, and then what are the risks associated with that. So kind of balancing those two issues. And we're seeing different states, whether you look at compare Florida versus New York, take very different paths. So I think investors are really going to be focusing on kind of how that goes, because that goes to what Mike Darda was talking about, the shape of the recovery coming out of what is likely to be just some brutal 2Q data, GDP at the top of the list. So that's kind of the balance here. How quickly do we reopen, and how safely do we reopen?
What's your take of the banks? I mean, I don't know, where's Allison? Allison
exactly.
Where's Sonali Basak? They just disappear.
They disappear when you need some...
they abandon us.
Yeah, exactly. It's interesting.
What's the state of the banks?
I think, again, what we've been told by the Sonali Basaks and the Allison Williams of the world is that they entered into this pandemic in much, much better shape than they did in terms of the financial crisis, and therefore will come out the other side in much better shape here. So I think that's kind of what we're seeing a little bit. They're certainly taking significant reserves, Tom, we've seen over the last quarter, and we're likely to see that this quarter as well as they prepare for the economic fallout from this pandemic here. But that being said, it appears that they're in better shape to survive this and thrive coming out on the other side. And I think that's kind of what the market's discounting right now when you look at some of the big banks and even some of the regional banks as well.
I'm absolutely fascinated, folks, to see what the transactions and combinations are over the next, say, 36 months. See what all that big money piled up does. Right now, we've got a Dow, negative 112, SPX, negative 7. I'm going to call it fractional. I'm going to call it lazy. The VIX. No, round it up. Back to 30, 29.72 on the VIX. And yields come in this morning. A lower yields at 6.67. 0.67 on the 10-year. This is Bloomberg. I'll get my decimals right.
This is a Bloomberg Pursuits look at luxury. Stanley Ho, the 98-year-old tycoon who built the Chinese territory of Macau into the world's biggest gambling hub, left 16 recognized children with 4 women behind when he died. Now Pansy Ho, the 57-year-old eldest daughter of his second wife, looks to be taking over the reins. The pressure is now on Pansy to unite the interests behind the Ho family's $15 billion fortune, rejuvenate an aging casino franchise, and lead the empire through the coronavirus pandemic that's caused gambling revenue to plunge more than 90%. Also charting a careful path forward, the Coachella Music Festival. Concert promoters are asking artists lined up for the annual Coachella Music Festival to play in 2021 instead. The clearest sign yet that the largest music festival in the U.S. will be totally canceled. Coachella draws 200,000 guests and as much as $100 million in sales for promoter Golden Voice and its parent AEG. I'm Andrew O'Day, Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Global News 24.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Hairbands to kids. Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
4 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And the S&P 500 is little change this morning as investors weigh the biggest drop on record in U.S. consumer spending and await President Trump's latest response in his escalating feud with China. We check the markets every 15 minutes throughout the trading day on Bloomberg. And right now, the S&P 500, again, little change at 3030. The Dow Jones Industrial Average down 0.2% or 48 points to 25,347. And the Nasdaq's up 0.6% or 54 points at 94.21. 10-year Treasury up 3/32, yield 0.67%. The yield on the 2-year 0.16%. NYMEX crude oil is down 1.2% on 39 cents at 33.32 a barrel. COMEX gold is up 0.7% or $12.40 at 17.40.60 an ounce. The euro 1.1115 against the dollar. The yen 107.54. And that's a Bloomberg Business Flash. Tom and Paul.
Thank you so much, Karen. Greatly appreciate that. Paul Sweeney and Tom Keene with us right now. The editor-in-chief emeritus, he's very emeritus, of Bloomberg News, Matthew Winkler, joins us. And what people don't know is in the conference room off of Matt's office, he had I don't know, it was like an acre. I think it was like an acre big, Paul. Like, when I'd get upset with him, I'd walk from one end to the back just to get the aerobics going. And off on the wall of Matt's old office, folks, was the famed Winkler hot air meter. And this would go off for CEOs of bluster. And he was very good at sorting out the hot air. And some of that, long ago and far away, was with Microsoft. I have memories of this, Matt. You don't remember this, but I do. And then like a moonshot, with Mr. Nadella, Microsoft has taken off. Matt, you're right about Microsoft this week. Is it all because of their CEO? Is the Saturn launch of Microsoft just because of the CEO switch of 2014?
Tom, I'm not smart enough to be able to tell you that. What I can tell you is that if you look at data compiled by Bloomberg, which is what we do every day, and my colleague Shinpei and I try to do as much as we can, Microsoft is as much a part of the 21st century economy as any company you can imagine. And that's because if you think about just, one really key fact alone, that Microsoft is a mainstay because it develops and supplies 75% of the operating systems used by computers and servers worldwide. You think about that. And so here we are in this COVID remotely engaged economy, COVID-19 remotely engaged economy, which actually is the economy that Microsoft has prepared us for. And businesses and individuals and governments are going to be, long after this day, thinking about ways to make themselves much more efficient, much more secure, much more safe. And guess how they're going to do it? They're going to do it with the very operating systems that we're talking about that come out of Microsoft, which goes all the way back, as you know, a couple decades. This is not a young company. In fact, it's one of the oldest companies. But what's interesting about Microsoft is it's outperformed what everybody refers to as the FANGs. If you look at the 5-year period from 2015 to the present and graph it on the Bloomberg, you can see that Microsoft has had just an uninterrupted appreciation with very little volatility compared to the other FANGs. And that's because, as I said, what's going on here is that companies, businesses of every type, governments, they're all trying to figure out how are we going to protect ourselves. And Microsoft's right there doing it. So I think that's a big part of the story. Sure, CEOs make a difference. They always do. And the one that is currently leading Microsoft is, just terrific. There's no reason for me to dispute that. I think it's evident. But I do think that the company is, in some ways, has been underappreciated, in part because, in the first decade of the 21st century, after peaking in 2000, Microsoft was sort of a distinguished mediocrity as a stock.
I'll say,
and that's what you were you were referring to, at the outset of the program. But in fact, Microsoft never went away. If anything, it got more important the older it gets.
Well, let's do this. Let's bring in Paul Sweeney, who's the only one in this conversation who remembers Wang Labs.
That's right. I certainly remember Wang Labs. Yep, absolutely, in the software. So, Matt, it's interesting here. You have a great chart in your column today listing the top companies by market capitalization, and Saudi Aramco is number one at $1.76 trillion. But then after that, it is just tech, and more tech. You have to go all the way down the bottom of your list before you find an insurance company by the name of Berkshire Hathaway here. So it just seems like technology, Matt, is really what the stock market is today. I mean, take a look at market cap.
Yeah, I think that's absolutely right. And you know that, of course. And so does Tom. I think what has to be said, though, is that if you think about how people are hearing and seeing what's going on in the market during this eventful year, they hear a lot about the Dow, they hear a lot about the S&P, but as you just said, the economy for more and more people is going to be a technology economy. And one of the things that's interesting is, Tesla, one of my favorite companies,
really?
is up more than 90% this year. Why is it up more than 90%? It's the first car company where you had to buy it online. Okay, you didn't have a choice because the dealers persuaded the governments not to let Tesla have a dealership. So in the state where I come from, New Jersey, under Chris Christie, I couldn't go to a Tesla dealer to buy a car. I had to do it on my computer. Guess what? That's where we are today.
Okay. Matt Winkler, thank you so much, Editor-in-Chief Emeritus. Seriously, folks, a very important a look at the FANGs and particularly the success of Microsoft. Look for that at Bloomberg Opinion. Paul, the week coming up and the June coming up, I can honestly say, in September of 2001, you could say we've never seen a September like this, or a December of 1941. This is totally different, and I would never measure this against those horrific events. We've never seen a June like's coming, have we?
We haven't, Tom, and it's going to be interesting. It's going to, start with obviously the unemployment data, but then it's going to come when we start seeing some of those GDP numbers coming out for the second quarter, and how bad is it? How deep is the decline? And then, of course, the conversation will switch immediately to what kind of recovery? What's the recovery going to look like? And should we be pricing in a wave 2 of the virus and the impacts and so on and so forth? But there's a lot of data in the month of June to digest, and the hope and the expectation, I think, is that it will mark the trough.
And I am fascinated, folks, really fascinated by, Michael Darda was just on, and I get that Michael Darda is looking out and he's doing the economist thing of forecasting 2, 3, 4, 5 quarters. The politicians don't have that luxury. They have to react to the here and now, as President Trump will in this press conference, somewhat scheduled today. So we'll just have to see. The Dow, negative 65. Standard & Poor's 500, negative 3. The VIX, 29.19. We are produced by Richard Truman, Ken Fellio, our global technical director worldwide. This is Bloomberg.
What? Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
This is an important update from the government. Coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search Sports Documentaries on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Who says you can't have a laugh while getting serious about America's pastime? On the daily podcast Locked On MLB, comedian and baseball fanatic Paul Francis Sullivan talks about each team, each pennant race, and everything else in the game, from rule changes and controversies to baseball cards and stadium food.
For those of you who are not familiar with me or the old show, I love to obsess over baseball. I'm talking baseball over the Super Bowl. We had a TV showing the division series during my wedding.
Search Locked On MLB on TuneIn to listen today.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Will technology lead us out of this crisis?
The worst jobs market, potentially in history.
The Fed seems to have really flexed its muscles.
How quickly can we recover from this?
Breaking market news and insight from Bloomberg experts.
To wring out that buy-the-dip mentality, that takes time.
Are we looking at a more damaging break in the labor market? Does the shape of the yield curve matter? We're looking at late 2021, early 2022. Where it really feels quote-unquote normal.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Friday morning from New York City and points beyond to our worldwide audience. Coming up, we'll chat with Jim Bianco of Bianco Research, get his thoughts on the markets. And then we need to talk China. And we do that. We go to our go-to source, Leland Miller, CEO of China Facebook International. We'll discuss President Trump's upcoming announcement on China expected later today. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg, what do you have?
Stocks have been mixed, Paul, with tech shares rising to offset the slump in banks. Investors are weighing the biggest drop on record in American consumer spending, as you say, are waiting for President Donald Trump's latest response in his escalating feud with China. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is down 0.3%, down 8. The Dow's down 0.5%, down 139. And the Nasdaq's up 0.3% of 26. The 10-year is up 4/30 seconds with a yield of 0.67%. West Texas Intermediate crude oil is currently down 1.5% at $33.16 a barrel, while COMEX gold's up 0.8% at $17.4270. The dollar yen stands at 107.58. The euro $1.1113, and the British pound $1.2349. A tidal wave of central bank stimulus sweeping the world has got some money managers worried about an old enemy, inflation. And that's why Aberdeen Standard Investments' James Athey is buying gold, classic hedge against rising prices. The money manager says the aggressive monetary and fiscal easing measures from the U.S. to Europe and Japan aimed at countering the economic damage from the coronavirus will likely create an inflationary world in just a year's time. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa Abramowitz and Paul Sweeney.
Greg Jarrett, thank you so much for that. Market Drivers is brought to you by Commonwealth Financial Network. For the 6th straight time, J.D. Power ranks Commonwealth #1 in independent advisor satisfaction among financial investment firms. Visit commonwealth.com to learn more. And Paul, you asked earlier, will tech lead us out of this rut? And it seems like, at least for today, tech is leading us out of what has been, at least over the past couple of days, a softening. Dave Wilson, Bloomberg stocks editor, joining us now. Interesting to see them sort of assume this haven status at a time of amped up rhetoric between the U.S. and China. What's the driver here?
You know, you kind of can't push that argument too hard when you look at the
11 main industry groups in the S&P 500, and you see, tech stocks are higher, but not all that much higher. I mean, you're talking 0.3% for the index, and you had a couple of disappointing results late yesterday, notably out of Salesforce.com. Those shares are down about 4.5%. We kind of found out that this company, which is all about cloud computing, internet-based business software, is not immune to what's going on in the broader economy. I mean, that was sort of the message of those results. They're cutting their fiscal year revenue and earnings forecast because, they're concerned about what's going to happen to demand. And it was a similar story at the consulting and services company DXC Technology. And those shares, worst performers in the S&P 500, down more than 12%. So, to the extent that you can look at tech as kind of a bellwether, for what's going on in the broader market. Sure, it's having an okay day today when you consider 4 of the 11 main industry groups are down more than 1%. But, all it's doing at the moment is really limiting the losses. And when you look across the group, you can certainly see some declines even there.
It's interesting looking at tech, Dave. Just Twitter obviously has been in the news with President Trump calling them out. But I see the stock again off about 3.8% today. But year to date, it's interesting. Twitter off about 16%. But fellow social media company Facebook is up 27%. So investors seem to be really focusing in on Twitter here as potentially some risk associated with President Trump and some of these conditions about protecting free speech.
Yeah, you've got all that back and forth, and clearly Facebook and their CEO Mark Zuckerberg have taken a different view than Twitter and its CEO Jack Dorsey when it comes to the flow of information, and that may well explain the difference in performance. Just looking at the two shares of where they've been the last couple of years, Twitter, has had a fairly decent run. That said, I mean, it's down for the year now, and Facebook is up. So, it's like one of those things where, the bigger company fares better. We've certainly seen, the focus on what they call the mega cap tech companies, the ones that are the biggest in terms of market value. And Facebook certainly qualifies for that group. I mean, you're talking about a market cap at the moment of more than $640 billion. So, they've been the beneficiary of that focus. At the same time, the Twitter, much smaller company by that standard, about $24 billion in market value as we speak. It's kind of had to rise or fall on the strength of its business. And, now the back and forth with Trump kind of, perhaps raises some questions about where that company's headed.
Well, and there's a larger discussion here, obviously, about how they've approached their interference in what people put on their platforms. And we will be having that throughout the show, given the focus on Twitter and its role in interfering or sort of couching some of President Trump's tweets with other issues that has created this incredible storm. And Facebook has chosen not to do that. And they've been rewarded in the stock market. And I think that this raises a question: where is the obligation of some of these big social media companies to try to adhere to standards that make them feel more media-like? Or is it going to be, honestly, the bottom line, the more popular they are, the better, full steam ahead, Dave? And I think that that's going to be a debate, and we're going to keep having that throughout the show. Before we let you go, though, I really want to talk about the Russell 2000. I've loved the Russell 2000. I've been watching it underperform and then outperform in a big way over this past month. There was this statistic. The Russell 2000 companies saw per-share profits fall 90% from a year ago, several times more than S&P members. Even as we see this divergence, is the hope trade just hope when it comes to the Russell 2000, Dave?
Oh, man, I tell you, today, you got the Russell down 1.25%, and the S&P 500 is only lower by 0.2%. So continuation of what we've seen this year. And, you're talking a 90% drop in profit. There was a report out yesterday from Jonathan Golub, who's their main U.S. strategist over at Credit Suisse, talking about a 95% decline in Russell 2000 profit this quarter, as opposed to 42% for the S&P 500. So it's clear they've gotten hit much harder in terms of their earnings as a result of the coronavirus and everything surrounding the pandemic. And, you look ahead and you see more of the same coming, which may well explain why those shares, the smaller companies in the Russell, have taken bigger hits this year.
Yeah, it's interesting, Dave. It's, one of the things that Tom Keene and I were just chatting about in the last hour. June is going to be a historic month for some economic data, whether it's unemployment data we're going to get next week or the GDP print for the second quarter. It'll be interesting to see how the market behaves when it's just a headline risk, I guess, coming up.
Right, and when you consider that, here we are with about a month left in the second quarter, so you kind of get on a lull period in terms of companies' earnings, you'd figure maybe the big picture economic indicators, to the extent they're really telling about where we go from here, provide a focus for investors.
Dave Wilson, Bloomberg stocks editor, we're not going to let you go just yet. I have a little question for you, Dave Wilson. Why was 2019 afraid of 2020?
No idea.
Because they had a fight in 2021.
2021.
It took a while.
Right.
I will just say.
Oh, no, I got it. I just didn't want to give you the satisfaction.
All right, so let's hear the ratings. Come on, bring them.
That's a 5 for me.
6 if you're lucky.
All right. Woohoo. All right. Well, if you've got them, send them over. Abramowitz at Bloomberg.net or at Lisa Abramowitz1 on Twitter. I got to say, Paul, the data today, very confusing, and we're going to be getting a brutal jobs figure in a week's time amid this period of everybody either working from home or being in a much more dire situation, frankly. And it's a huge contrast, this rally that we're seeing in equities, the stability, and the reality of the economic data. It has not changed yet, even as we do see that optimism persist. Right now, let's head down to our 99 Win studios in Washington, D.C. Nathan Hager there with world and national headlines. Nathan.
Lisa, we'll see what that optimism persists as we await to hear what President Trump has to say about China over its moves to pass a national security law on Hong Kong. The president says he will hold a news conference on it today. Bloomberg chief Washington correspondent Kevin Cirilli reports Hong Kong's special trading status could be on the table.
Secretary of State Mike Pompeo earlier this week delivered a message to Congress saying that based upon a review, that review, mind you, was started well before the pandemic had begun, that he can no longer justify Hong Kong's special trading status.
White House economic advisor Larry Kudlow tells Fox News the president will present ideas to hold China accountable. He says the U.S. is furious with what the country's done in recent days, weeks, and months. In Minneapolis, protesters set a police station on fire in a third night of demonstrations over the death of George Floyd. Unrest flared up in cities across the country over Floyd's apparent killing in police custody. On Twitter, President Trump called the protesters thugs and offered to send troops into Minnesota, writing, "When the looting starts, the shooting starts." Twitter flagged that as glorifying violence. Then the official White House Twitter account retweeted it. Twitter flagged that one as well. Democrat Joe Biden is reacting this morning on Twitter, saying he won't lift the president's tweet, but he says the president is calling for violence against American citizens during a moment of pain for so many. "I'm furious and you should be too." That quote from Joe Biden. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
In these times of loss and crisis, the people you trust to ask the questions you need answered become even more vital.
Should the president, though, impose the Defense Production Act?
Carol Masser and Jason Kelly.
Help us understand what we know so far.
Bloomberg Business Week.
They are on the front line of the impact of the coronavirus.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
To protect her home and family in a disaster, Karen was willing to wade through water, mud, and insurance paperwork.
Yeah, I can do this.
You go, Karen! By simply understanding and updating what her insurance covers and doesn't cover now, she'll be better prepared no matter when disaster strikes. Learn other simple ways to protect your home and family before a natural disaster at ready.gov. That's ready.gov. A message from FEMA and the Ad Council.
How long? How much? How many? Financial, policy, and medical experts are working on answers 24/7.
What about public debt?
We are listening to those experts 24/7.
Is the Fed effectively widening this wealth gap with its programs?
Because you want want answers too.
What's the most important, the trillions in stimulus, the economy's reopening, or the infections curve bending?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search classic game replays to start listening. Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn. Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is,
or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
The S&P is limping into the final day of trading in May as data indicate the engine of the American economy has rapidly decelerated last month. Trump's announcement that he'll address the press on China rattled equities late in yesterday's session, but signs that he'll stop short of upending the American trade status with Hong Kong eased nerves just a bit ahead of his comments later today. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500's down 0.3%, down 10. The Dow's down 0.5%, down 113, and the Nasdaq is down just about 0.1%, now down 9. The 10-year is currently up 4/32 with a yield of 0.67%. West Texas Intermediate crude oil is down 0.7% at $33.50 a barrel. COMEX gold is up 0.9% at $17.4460 an ounce. The dollar yen 107.51. The euro's $1.1128, and the British pound $1.2373. U.S. consumer spending, which accounts for about 2/3 of the world's largest economy, plunged in April by the most on record after the pandemic halted purchases of all but the most essential goods and services. Household outlays fell 13.6% from the previous month. That is the sharpest drop in Commerce Department record back to 1959. Rock and roll. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Paul, this week starts the marking period of, are we seeing a hopium trade, or is there something real underpinning this? We're seeing a real beginning of a reopening, and a lot of people gaining optimism that perhaps we will get a sharper rebound than some people had expected. It's sort of a V-shaped recovery and V-shaped recovery expectations. Joining us now to discuss, Jim Bianco, president and founder of Bianco Research, based in Chicago, also a contributor to Bloomberg Opinion. I love speaking with Jim. You always have a great contrarian but apt view of a multi-asset class perspective, but with a focus on the bond market. Right now, what you're seeing, is it more hope than reality?
I'm afraid that there's a little bit more hope in here than the reality, and here's why. If you go back to 2008, at the worst point of that recession, you had output at 96% of what it was in 2007. You only had a 4% contraction in output. In the Great Depression, you actually had a 75% of the output that you had at the 1929 high. If you go with the consensus figures, we should have about an 11 or 12% contraction at the end of the second quarter. Then comes the rebound. Okay, we got to get back to 96% of where we were. We got to get back to 98, and that's what just put us at a 2008 type recession. We got to get back to 98% of where we were to have a garden variety recession. So when I look at things like the mobility numbers, the open table numbers, the consumption of gasoline numbers, these numbers are nowhere near getting back to just 2% of where they were in January. They're still 20 or 30% below. And I'm worried that we're not going to get all the way back. And I'll give you one more statistic. Yesterday, we had 2.1 million people file for initial unemployment claims. If you add in the pandemic insurance for the gig workers, it's more like 3 million. And I got this from Mike McKee. He tweeted this out yesterday. Look, we're 10 weeks into the pandemic, and last week, Connecticut became the 50th state to be in some stage of restarting their economy. If we still had 2 million people file for claims last week when everybody restarted, those are probably permanently lost jobs. Those are probably not temporarily furloughed jobs because of the pandemic. That happened earlier in the pandemic. That really leads up me to believe, yeah, we'll get back to 90% of where we were, but that's still a bad recession, and I think that's going to be a big disappointment for a lot of people.
So, Jim, I guess a new term for me and for many investors this week was yield curve control. What does yield curve control mean to you, and do you think it's a good idea / strategy?
Yield curve control, it goes by another phrase called price fixing. The Federal Reserve
okay, I think I know where we're going.
Sets the price. They set the price. They've already done it on the front end of the yield curve. They set it at 0. And now we're talking about them setting the price further out the yield curve, and then they would say with their balance sheet they would use it in an unlimited way, hopefully wouldn't be unlimited, that they would ensure that that price would be set. Price fixing has never worked. Now, to be charitable about it, the day you set the price is probably close to the proper value, just like Japan did in 2016 when they set the price of their 10-year yield at 0. But then over time, the economy will, expand, contract. Investor preferences will change. Things will be different. But what won't change is the interest rate. That will be the same every single day. And eventually, over time, it becomes the wrong interest rate, and it winds up causing more problems than it's worth. So I'm very worried. I think if the Fed was to study the Japanese example of yield curve control, or the example that they did during World War II from 1942 to 1947, they did yield curve control, it largely didn't work. But yet, I think the reason they're doing it is because they don't want to go to negative interest rates, another scheme that doesn't work. And this one is kind of like negative interest rates light, and it just gets them to be able to say that they're doing something, but they're not doing the draconian thing of negative interest rate. But nevertheless, it's still not a good policy, and I hope that they don't follow through on it.
Well, it's showing the limits of monetary policy at a time when people are saying fiscal policy is necessary. And we've gotten that. And this was evident in the consumer income numbers that we received today, where we actually saw incomes rise by 10.5% in April, people attributing this to the enhanced unemployment benefits. When will we start to see this in spending, which actually was worse than expectations? We're seeing people put this money in savings or buy basic necessities, but it really isn't bleeding into overall consumption yet.
Yeah, what's consistent with that number, too, is the University of Chicago study that said 68% of the people that are now getting unemployment insurance, and remember there's an extra $600 a week from the federal government in there, are actually making more money off of unemployment insurance than they did in their job. And that's what you see in those personal consumption numbers. I think really the reason that you're seeing the spending or the spending not kick in is we know that that's going to end in a couple of months, right, unless it's renewed. And so, yeah, I'm happy that I'm getting more money on unemployment than I didn't, than when I was working. But I know that that's not forever. And I think once there's a permanent resolution to that, either it gets extended for a long period of time or doesn't, is going to determine how people spend.
Hey, Jim, thanks so much for joining us. We always appreciate your perspective. Jim Bianco, president and founder of Bianco Research. Jim is also a contributor to Bloomberg Opinion, giving us his thoughts on kind of the Fed, the economy, and what is to come for the U.S. economy. This is Bloomberg Markets.
This is a Bloomberg Money Minute. Stocks off to a mixed start to the new trading day. The Dow down about 0.5%. The Nasdaq also down about 0.25%. The tech-heavy Nasdaq, though, is up 0.25% higher. Weighing on investors, worsening tensions between the U.S. and China. And President Trump is expected to speak about relations with China later this morning. He may impose new sanctions on Chinese officials and companies. Also troubling investors, personal spending taking a plunge, down nearly 14% in April. Americans made a lot more money that month, thanks in large part to government stimulus checks, but we didn't spend it. Shares of Twitter down another 4% today. For the first time ever, Twitter added a warning to a tweet that President Trump sent last night, saying it glorifies violence, suggesting the U.S. military should shoot protesters in Minneapolis if they loot stores. And GM will ramp up auto production at several plants next week that make pickup trucks and SUVs. Tom Busby, Bloomberg Radio.
You're fierce. You take care of business and don't hold back. Taking care of your health shouldn't be any different. You know when something's off. Don't ignore symptoms like fatigue, joint pain, and rashes. Listen to your body. It could be lupus. We're here to help you take control. Learn how at BeFierceTakeControl.org. Brought to you by the Lupus Foundation of America and the Centers for Disease Control and Prevention.
Bloomberg and Eaton Vance Independence are proud to present a Boston Pop salute to our heroes. This Independence Day, the orchestra's 4th of July tradition continues. The program will feature guest artists, highlights from past fireworks displays, new music paying tribute to the heroes of the current health crisis, and honoring the memories of those we have lost. Watch and listen Saturday, July 4th, starting at 8 Eastern, exclusively on Bloomberg Television and right here on Bloomberg Radio.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Airbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs. Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
This is an important update from the government about coronavirus symptoms and testing. If you have any one of the following symptoms, a high temperature, a new continuous cough, loss of taste or smell, you can now get tested. Do not leave home for any reason other than to get tested. Find out how to get a test and how long to isolate at nhs.uk/coronavirus. Stay alert. Control the virus. Save lives.
Wondering what to play next? Want to know what other TuneIn listeners are listening to right now? Head to the trending section under Browse to explore the most popular stations and podcasts on TuneIn today. Millions of listeners like you can't be wrong.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is,
or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
A lot of great conversations coming up. We've got Leland Miller of China Beige Book talking China. We've got Nathan Sheets of Peacham Fixed Income talking talking about the economy as well as any potential drag from China. And then in the 11 o'clock hour, Fed Chair Jay Powell will take part in a conversation that is taking place remotely. Right now, though, let's head over to Greg Jarrett for a Bloomberg Business Flash. Greg.
Stocks are down, Lisa. Investors are weighing the biggest drop on record in American consumer spending, and they're waiting for President Donald Trump's latest response to his escalating tete-a-tete with China. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 0.3%, down 10. The Dow is down 0.5%, down 132. And the Nasdaq's little changed. The 10-year right now is up 6/32, the yield 0.67%. West Texas Intermediate crude oil is down 0.7% at 33.47 a barrel, with COMEX gold up 1% at 17.4560 an ounce. The dollar yen 107.60. The euro's $1.1124, and the British pound $1.2374. Bank of New York Mellon may encourage some of its employees to work from home more often after the pandemic ends as a way to shed costs, joining companies like Twitter and Barclays in suggesting the crisis will permanently change the way they do business. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, we are awaiting a press conference from President Trump sometime later today. One of the many topics likely to be addressed will be the rising tensions between the U.S. and China. Whenever we want to get smarter on China, we welcome our guest, Leland Miller. Leland is the CEO of China Facebook International. So, Leland, I hate to put you on the spot. What do you think we could possibly hear from President Trump today as it relates to the current state of U.S.-Chinese relations?
Well, look, the issue of the day is Hong Kong. And I think it's important to understand the landscape has changed dramatically over the past several weeks. So first, Beijing pushed through Article 23 sedition laws in Hong Kong. It's a process, but they've announced it's happening. It's coming out of the National People's Congress. The State Department, the U.S. State Department, has responded by decertifying Hong Kong as an autonomous entity. So saying there's no difference between Hong Kong and China based on its review. What this has essentially done is set the two sides up to see how much this is going to escalate. And President Trump has a presser today. He's going to lay out the fact that the situation has changed, that the United States is prepared to escalate in some dramatic ways if it sees Hong Kong change dramatically on the ground. But I think right now you're at a point in which each side is looking at each other and saying, we're going to see how bad this gets, and we're going to react based on some of the realities on the ground rather than the initial step of the laws going into effect.
What are some of the U.S.'s options in getting tough with China right now?
Well, look, you have nuclear options that the White House is not ready to go to, but I think the more realistic ones are visa requirement changes. There's a lot of worries about extradition and ways that the Chinese will take advantage of the new laws to basically disappear people. There needs to be extradition is a major topic. Sanctions are going to be on the table, particularly financial sanctions. And then, of course, tariffs are looming in the background. We know the president loves tariffs. This doesn't mean they're ready to actually commit to hiking tariffs and to revoking special status. They don't appear to be there yet. But it means that the president has to lay out the landscape. Here's what we've got on the table, and then sort of dare Beijing to behave within the construct of the new system.
Leland, any sense of why China is taking this harder, more sterner stance towards Hong Kong right now? Is there anything unique in the timing here?
Yeah, there's a tendency to look at everything through the U.S.-China lens, and it's not that there isn't a U.S.-China angle here, but this is basically a reaction to Hong Kong's domestic political schedule. You have legislative council elections in September, and if those proceed, pro-Beijing forces are going to get demolished. So Beijing had an option of either postponing or suspending or getting rid of those elections, or else moving in the summer window to push forward Article 23, which will essentially make it illegal to do anything promoting secession, sedition, treason. Gives them a wide variety of options to be able to ensure that people they don't like don't rise to power in Hong Kong. So this was their window. They're moving on it. It just happens to be a very critical time in the U.S.-China relationship as well. So everything is a reaction to everything else.
You said earlier, and you've said this a number of times, that you think that the Phase 1 trade deal is going to get torpedoed later this year. We were speaking with a number of people from the Trump administration that doesn't seem to be on the table right now. There seems to be a cautiousness about going that route. What do you think would make that change?
Well, I think the reality on the ground is the Chinese can't live up to the terms of the deal. And you could say that some of it's COVID, or a lot of it's COVID. You could say part of it was an unrealistic deal. But going into the fall, we're entering the most toxic period in U.S.-China relations since the Tiananmen Square incident back in 1989. I think things are going to get really, really tough. And as a result, it's going to be very difficult for the president to stick by a deal, particularly with the Chinese, particularly when they're not adhering to most of it. They're hitting some targets. They may even exceed a few targets on the agricultural side. But in order to back the deal, the president's going to have a lot of pressure on him to condemn the Chinese and to walk away from it. And I think that sooner rather than later, that actually gets to him.
It's interesting, Leland. I think real quickly, my question, I guess, is just one. Is there really anything that we can do to prevent Hong Kong from really becoming a part of China and really lose its independence and internationalism?
No, we have no way of stopping what's happening, but we can affect how it looks. So one of the reasons why I wouldn't expect to see the full range of options laid out today, or at least pushed out today, is that the United States has an ability to affect how aggressively the Chinese act in Hong Kong, even when Article 23 is a reality on the ground. If people are disappearing left and right, particularly, next week is the Tiananmen anniversary, that will be extremely incendiary. If this law applies retroactively, it would encompass all the people who participated in democracy protests for the last couple of years. It would be extremely incendiary, really worry people on the ground in Hong Kong, even more so than this case now. So the United States, by keeping active, by keeping aggressive, but keeping its options open, can affect the way this plays out on the ground. It can't reverse it, but can affect how it looks, 6 months or a year from now.
Leland Miller, thank you so much for being with us. As always, your insights are incredibly valuable. Leland Miller, Chief Executive Officer of China Beige Book International, and we are expecting that press conference from President Trump. We do not know the exact time yet, but we will bring it to you when it comes. I'm sure it will be a wide-ranging one, but the focus very much expected by markets is on China and what the U.S.'s steps may be. Right now, let's head down to our 99.1 studios in Washington, D.C. Nathan Hager there with world and national headlines. Nathan.
Lisa, thanks. Joe Biden says President Trump is calling for violence against American citizens during a moment of pain. Presumptive Democratic presidential nominee took to Twitter moments ago to react to the escalating fight between the president and his favored social medium over what is happening in Minneapolis. Demonstrators angered over the police custody death of George Floyd set a police precinct on fire last night in a third night of demonstrations. On Twitter, President Trump called the protesters thugs, threatening to call in the military, writing, "When the looting starts, the shooting starts." Twitter tagged that and a White House retweet for violating rules against glorifying violence. A CNN crew reporting from Minneapolis, I should say, was briefly arrested this morning. Minnesota State Police officers led reporter Omar Jimenez away in handcuffs during a live report. His producer, cameraman, and their security guard were also taken into custody. They were released after CNN chief Jeff Zucker spoke with Minnesota's governor. At least 7 people were shot in Louisville, Kentucky overnight as protesters demonstrated against the killing of Breonna Taylor. She's a black woman who was shot to death by police in her home back in March. Kentucky Governor Andy Beshear.
Last night's event started as a very peaceful protest, but one where those out there were seeking justice. And actually, it was one of the most compliant protests with the CDC guidelines that we have seen.
The Courier-Journal in Kentucky reports about 500 to 600 people marched through downtown Louisville last night. Police say no officers fired their weapons, but there were some arrests. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
In-depth analysis. Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
This is an important update from the government about coronavirus. We all need to stay alert so we can control the virus and reduce the risk of infection. Staying alert means you must stay at home as much as possible. Work from home if you can. Limit contact with others. Keep your distance if you go out. And wash your hands regularly. Do not leave home if you or anyone in your household has symptoms. Stay alert. Control the virus. Save lives.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, pass to the 5, touchdown!
Search Classic Game Replays to listen for free.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office. And, you know, when I was 14 years old, my family moved back from Sudan to America. I went to high school here in New York
Find these and more NBA podcasts right here on TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
The S&P staggers into the final trading day of May as data show the engine of the American economy rapidly decelerated last month. President Donald Trump's announcement that he'll address the press on China today rattled equities late in yesterday's session, but signs that he'll stop short of upending America's trade status with Hong Kong eased nerves somewhat ahead of his comments today. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is down 0.5%, down 17. The Dow's down 0.75%, down 194, and the Nasdaq is down 0.2%, down 18. The 10-year is up 7/32. The yield is 0.66%. West Texas Intermediate crude oil is down 0.75% at $33.45 a barrel, with COMEX gold up 1.2% at $17.4860 an ounce. The dollar yen is at 107.68. The euro is $1.1124, and the British pound $1.2373. Sources say Uber and Grubhub are haggling over a breakup fee after nearing an agreement on a merger price. Those sources go on to say that Grubhub wants Uber to agree to pay a cash sum should U.S. regulators block the proposed deal to combine two of the country's largest food delivery operators. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
The market has been buffeted recently by a series of economic data that show a brutal reality, as well as the incredible policy response that has fueled optimism in markets, and now increasingly a focus on growing tensions between the U.S. and China. There is no one better to speak about all of these things and the intersection of them than Nathan Sheets, chief economist and head of macroeconomic research at PGIM Fixed Income, with more than $800 billion under management, who has worked at the Fed, working on some of these emergency programs during the last financial crisis, as well as in the Treasury Department, working internationally with a front-eye view in the possible issues that may arise there. Nathan, thank you so much for being with us. We have talked so much about the policy response. I want to shift gears in terms of the U.S.'s response to China, and from a financial perspective, how worried market watchers should be about the escalating tensions right now between the U.S. and China.
The U.S.-China relationship is clearly a first-order risk for the economy and for the markets. I think we saw it last year with the trade war, and I think that this escalation in the tensions between the United States and China that we're seeing in recent weeks here also holds some very significant risks that we need to worry about. Now, my expectation is that President Trump is going to try to keep this mainly in the field of rhetoric between now and the election. But the possibility that he missteps, the possibility that Congress forces his hand, or the possibility that the Chinese react more vigorously than what the administration is expecting, I think all of those possibilities hold meaningful risks, and I think are concrete risks that we need to be thinking hard about as we consider the markets over the next 6 months.
All right, so we've got that to worry about, but we also have the reopening, if you will, Nathan, of America. It's kind of on a state-by-state basis, region-by-region basis. What is your expectation for how this reopening goes and what it might mean for economic activity and a potential rebound later in the year?
So I am persuaded that the geographical diversity and heterogeneity that you described, that different regions are opening up at different paces, is likely to be a feature of the U.S. economy that is somewhat supportive of recovery. And just to emphasize that, I think right now much of the industrial northeast of the country is still pretty well locked down, but there are broad swaths of the South, the Midwest, and the western part of the country where the economy is moving back toward normal at a pretty rapid rate. So when I put all of this together, it gives me maybe a little bit more confidence than I had a few weeks ago that the U.S. economy is going to be able to achieve a gradual U-shaped recovery. I don't expect the level of GDP to be back to where it was at the end of 2019 until well into 2021. But I think a gradual recovery, growth in the second half of the year is a pretty reasonable baseline, and I think it's the one that's being priced in the markets at this stage.
The hallmark of this downturn is the unemployment rate, which has been surging and may reach what some expect to be 20% this month in figures that come out next Friday, a week from today. I'm struggling to understand the skills gap that emerges and how we close that. The idea that a lot of these jobs will not come back in the same form and that people will have to get rehired in new roles that require new skills. How long do you think that takes and what could speed it up?
In my view, the three big questions that characterize this recovery, and I think frame the risks around them, are first, what happens with the virus? Second, what happens in terms of psychology of consumers? And the third one is exactly this issue that you're highlighting. Through this period, to what extent has the underlying structure of the economy been damaged? How many workers are there that are not going to be able to go back to their jobs and their skills are diminishing? How many firms that were previously productive will now be bankrupt and as a result of that unable to produce? I think it is very much, the answer is very much an open issue, but I think what we can say is the faster we're able to get back, the better the virus proceeds, the less damage we'll see over the medium to long run in the economy. I think the other point that's important here is I think that the stimulus that the Fed and Congress have put in place will also help buffer the downside and help drive a stronger recovery than might occur otherwise. So I guess I would say I'm cautiously optimistic that we won't see long-lived damage, but we're still at a place where there's a lot of uncertainty surrounding those assessments.
Nathan, you mentioned fiscal stimulus. We've gotten a couple of rounds so far. I guess the next one potentially might be something along the lines that the House passed, a $3 trillion stimulus bill. How important is another round of fiscal stimulus, particularly one that focuses on states and local municipalities, as many governors have called for?
So I do expect that we will see another fiscal stimulus bill. I think that the needs to replenish the PPP program for the small businesses, to extend the unemployment benefits, and as you say, to do something for the state and local governments, I think that is will be compelling, and Congress will see that as something that is unavoidable. Now, that said, I don't think we're going to see a $3 trillion package. My guess is that it would be more in the $1 to $1.5 trillion range, and I would expect that Congress would approve that probably late June or into the first half of July.
Nathan, 20 seconds. I'm just wondering, right now we're seeing a Fed balance sheet at $7.1 trillion. Where do you think it gets by the end of the year?
Well, I think it's going to be probably